Good evening, everyone. This is Bagger Don at Stock Market Caddy. It is Sunday evening, February 2nd. We thought we'd give you a view of this for those who've been kind of hanging out and going along with us. We started not this week. We carried, so we didn't make any change to the account. We carried the position from Friday over, very similar to last week, and but the account balance was $30,000 last Sunday. Last week, we got to about about 42. We added 10,000 at the open tonight, and we're gonna sit tight. Um, I hope I hope everyone was selling those rallies last week. We were. Our options are looking really, really good. They have a way of pinging the market, but everybody got kind of sucked in, and hopefully not you guys. If you have any questions on who we are, what we're about, don't hesitate. We'll be here. I've got a number of things that we're working on and doing. So I'll try to periodically get back and answer any questions, but we'll let you watch. Whenever there's a market sell-off, every Tom, Dick, Harry, Tom, Harry, Dick, it's going to show up and have an opinion of why it's selling off. Folks, we're not going to add to it, right? It's this, it's that. Oh, it was the China deal. Remember last week is the China deal. Now it's the tariffs, or it's asinine. We've been telling everybody and our members that we have dry timber. The conditions are ripe for a major correction to this market, and it's just getting started. Hope you're in position. And we'll just say periodically say hello. How you doing, Carrix? My name is Don Marshall. This is Stock Market Caddy. You are looking at the Swing Machine Plus, and we got an interesting market here, right? Not a big surprise, right? We were describing this. If you go to the recap on Friday, um, and a beautiful move. Let's see. This is a 5 minute. This is a 5 minute signal that we virtually took a little bit before. This was on Friday at 125. So we gapped down. Very similar to last Sunday and Monday, only to see the market do what? Counter back all week. Remember? Sucked in everybody, sucked them all in, and then ba-boom, we hit them again. This week, don't expect the counter. It's the second mouse that gets the cheese. Let me show you something. This is so beautiful. I love this chart. Look at this chart. Do you see this? This is a price chart. This by the way is not typed by me. This is the program doing that. You might favor the short side. Distribution underway. Now, what I want to show you is let's just put a date on here. You ready? That date is November 19th. Way back here, November 19th. What is this? This is election. No, wait a minute. No. Excuse me. Let's see. No, November. No, this is actually, it looks very similar. So this was after the election. But this is January 13th. We had a little bit of a turn down. NQ might limit down tonight. No, the NQ is down, but it's not limit down. No, I'm not saying that at all. Mm-mm. Nope. Um, and then we had this move, but this was last week. This was last Sunday, and we came down and we took out this little swing here. And then the rest of the week, we just countered right back up. And then on Friday afternoon, we rejected that and down. So, there's a number of ways to play this, and we have all kinds of systems to play this. You can play these C points, but this is the crazy part of this for folks, and this happens all the time. Let me get a marker. Is, some of the folks may have got short down in here. They short in the hole, and then the rest of the week it squeezed them out. And now we were getting short in here with options, and we were doing it again on Friday afternoon, Thursday afternoon as well. We like to do our option work at the very end of the day. But this would have been the first mouse number one. And this is the second mouse. You ever hear that expression? It's the second mouse, although many times we're the first mouse a lot of times and we do pretty well, but the second mouse can do really well because they're the ones who get the cheese. But if you shorted down in here, this happened from Sunday to Monday morning, and then if you shorted on Monday morning, you got your ass kicked all week long. And then you get out on Friday, and then boom, we're right back down again to the scene of the crime. We're going to break this time this week, and where are we headed? At minimum, we're headed down here, which is roughly about 5,800. I think maybe we break it, but our options. So we trade futures mostly um, intraday or intra-evening, highly liquid, and then on a position basis, we trade futures. The reason why we're holding a little bit more capital than normal is I can explain to you what happened was we were short. This was last week on not last week, the week before. And we had a little marginal profit and we decided to carry it overnight because we thought it looked pretty ugly. We didn't expect the big gap down. When we got the gap, down, we captured about about 18,000 or so, $16,000. We did not go long. We got short again, and we traded a little bit last week, and we were. I'm going to give it to you in round numbers and off of our account. I can tell you what we did, and then on Friday afternoon we got short again. We don't ordinarily we're starting fresh and clean, but this trade was really setting up nicely. This is the S&P, by the way, not the NQ, but all the markets more or less move together. But let me peel this back, take this writing off, and let us go back. And so in terms of the account, we're here. So last Sunday, we come into Sunday evening before the open, and the account is roughly at about 30,000. Overnight, overnight, the account goes to 54,000. In the morning, the account, if you're looking just if you're scoring it by the money, which we don't like to do, we really score ourselves on profit factor. But the account was at around 45 or so. But regardless, we tried to stay with the short all week. Um, we were well ahead of our weekly plan. Um, and we didn't get it didn't revisit. We thought that we would revisit this low. We'll bring it back here. We thought that we would revisit this low last week. It never did. So when it got to be going into Friday morning, our account, we were at about 35,000. We had made 5,000 for the week. But I said to Susan and maybe to the folks that are watching, I said, if we get a sell signal again on Friday afternoon, probably going to take it, and we want to see how it looks going into the close. And that's what we did. So it was early in the afternoon on Friday, and going into the close, we carried it. We were up about 6 grand, which put our account up about to like 41 or 42,000. We carried it once again, and then boom, we gap down tonight, and where the account is where it is, right? And we're running a very, very healthy profit factor. So we're usually much more active with our futures trading, but because of the unique circumstances that we found ourselves in, that we thought we might want to slow it down a little bit, and see if we could, get this correction under our belt. And it looks pretty good right now. So we're going to sit on this baby. We'll probably set some parameters overnight. Probably going to do much the same thing, and wait till Europe wakes up from this. Now, what we're not going to do is I'm not going to add to any noise, right? Remember last week? Oh, it's like China because of the AI, and and make some shit up. Um, I'm not going to do that. Um, you know, Tonight it's going to be, oh, it's the tariffs. That's just all fake news, bullshit, crap. We just trade the money flow. That's it. And we let the media play their games with why and everything else. We just don't do that. So if you have any questions about who we are, what we're about, be sure to visit Stock Market Academy. We haven't been doing this for like 6 months or 6 years. I've been doing this now actively with my wife Susan. It's kind of scary, but over 20 years now. Scary. And before that, so I'm not fresh out of college. No. My first career was not from Wall Street. My first career was teaching surgeons how to do surgery. And folks, this isn't surgery, but we approached it as if it is. Um, it's all math. It's all money flow. And if you want to know more about how you can participate and how you can join and what we're about, I encourage you to visit the website. I'm going to put a little note down there, and you're welcome to ask us some questions. And I will periodically check in. We got a very busy evening, though. We got a lot we're doing, so I'm not just we're not doing the what other people do, online. We're not running a podcast per se, and just trying to fill everybody's head with a bunch of stuff. It's just the numbers. It's just money flow. And our job as traders is to um, extract the cash flow and then collect. At the moment, there's still dollars. Collect the cash and go do something with it they like to do. By the way, here speaking of other things, here's Bitcoin. I know this is huge leverage. And Swing Machine also went short. This was at 12.10 on Friday. Now, if you wanted to hodl your Bitcoins, hodl them, stack them in the basement, shine them up and look at them and, touch them, feel them. Oh, you can't touch them. Oh, okay, but that's okay. But you could hodl them. And, but if you had come in to the futures market while you were hodling your five Bitcoins, five of them would have been 500,000. You might as well hedge them. Take one futures contract, you would have saved yourself $38,000 in value if you had hedged them. Don't know what it means to hedge? Well, you got to learn that. Ethereum, pretty much same thing. So beautiful move tonight. I hope it didn't catch you by surprise. Mario, I didn't mean to chase you away. Mario was asking if the Nasdaq was limit down. Not tonight. Not tonight. She's only, she gapped down a couple of percent. If the if the markets ever opened, or tomorrow morning they were to open the public markets and open 10% down, that'd be a beautiful thing, wouldn't it? I don't then you could get a limit down where they just open like for one tick and then they close them. And then you open the next day. And if they limit down again, they limit down again. So all those folks that got EMs, and now I'm not thinking we're going to limit down. I don't think so. I don't think so. Um, I don't want to, I don't, want to put that in the air, but theoretically it's isn't, I shouldn't even say theoretically. Is that sort of thing a possibility? Not for tomorrow, but is it a possibility? It can happen. It can happen. They can close markets, but I don't see any reason or anything like that here. We just got a little trap door, technical trap door, because the markets are what we were seeing for the last 10 days and why we've been putting on options. We've been putting on all kinds of put options, folks, going out to the end of March, and told everybody, that rally last week was just a wonderful opportunity to sell. It was a suckers rally all the way, and but what we were seeing was market was at the high. The breadth of the market absolutely was putrid. The VIX was low, but not as low. So we're seeing a false low in the VIX, false high in the market for the second time, and a very high skew. That that condition has been going on for the last couple of weeks, and that's very conducive to, flipping on the light switch to your office and then ba-boom, it's full of gas and it just like, we ignite. And that's what's happened again tonight. But I don't think this week we're going to come flying back. I don't think so. Nope. That's going to be the proverbial. So we might add another 500 points down on the Nasdaq overnight. I wouldn't be surprised then. And then we'll see, then the public, the US public, they don't get to see their markets. They're not even paying attention. They're watching Disney or 60 Minutes, or, watching a football game. And in the meantime, um, their retirement accounts and stuff are going to get a punch in the nose tomorrow. But they're of a mindset that, hey, it'll come back. Don't worry about it. It'll come back. Yeah, okay. Don't worry. Don't worry. It'll come back, Martha. Okay. Maybe, maybe, you know, maybe. A little facetious there. It always has. I mean, it has for the last 14 years. But there is going to come a time when it isn't. Mm, You know, look at the Nikkei. The Nikkei in 1991, 1992. Some of the kids today, they weren't even born. They're just babies. They weren't even around. The Nikkei, what are you talking about? You old boomer. What are you talking 1991 for? Because in 1991, I'll just tell you this short little story. The Japanese were ruling the world. The Japanese were buying Pebble Beach. They were buying Rockefeller Center. They were buying everything. They were killing it, weren't they? And their Nikkei, which was the equivalent of like our S&P, it was at 30,000, 31,000. They were killing it. And their husbands were called the salary men, and they would go to work all day. Then they'd go to the strip clubs, and then they'd go home, and the wives were buying and selling stock, and they were having a grand old time. And in 1991, when the Nikkei was at 30,000, there was some salary man, and he was about 40 years old, 40 years old, 40. And he hadn't participated yet. And so he spoke to his wife in Japanese and said, "Hey, honey, we got to get in." And he put his entire retirement account, everything he had into the Nikkei at 30,000 because you know what? We're on top of the world. It's never going down. We got to get in. 2 to 3 years later, the Nikkei, the Nikkei went from 30,000 to under five. Did you know that? Yeah. The Nikkei did not get back to 30,000 for more than 30 years later. That guy, if he bought the Nikkei, and I'm telling you he did, he bought the index, he didn't get all his money back until he was 72 years old. Till he was 72. Now, his neighbor didn't buy the Nikkei. His neighbor bought a bunch of individual stocks, and a lot of those individual stocks went bust. A boom. And then he died when he was about 74. So you everything is relative. The market might be new to you. You may have just retired and you got it all figured out. And you got your whole retirement in front of you, and you got all those assets that you've been worked and saved for. Good for you. Now comes the challenge of holding on to them. And those guys at Government Sachs, the only building in New York that doesn't put a name on the building, their job is to get that money. I've talked to some of them, and that's what they'll tell you offline. That's their job. Their job is not to make you rich. Their job is to make themselves rich. So, and you may be fresh out of college. You may be 30, 40, but you've got to think this all through. The market is the market. It is a tough place. And it don't give a shit about me or you or your wants or anything else. It just doesn't. And it didn't care about that guy in 1991 who bought the Nikkei. Things are changing. We, I, Susan and I would arm wrestle you for the right to say that we are the most ignorant persons in this market. Not dumb, and say that, just ignorant. Because I don't know why the market sold off. I don't want to know why. You may want to know why. I don't. I really don't. I mean, we can chat. If you want to have a little, sidebar, happy to chat. We can talk some of that pseudoscience. Imagine spending $300,000 today to go get an economics degree. I'm sorry, if you get an economics degree, I'm happy for you. Good, good. I don't know what you're going to do with it, but in that, I mean, prior to the 1940s and all, the only place that had an economics degree was really Princeton, and but prior to that, it wasn't even a major. It was, I still think it's just a junk science. It's a pseudoscience. It's like, I hate to say it, criminal justice majors, criminal justice. I always kind of thought like, maybe it should be like victim justice, right? Why do we have to have justice for criminals? Criminal justice? Maybe victim justice. Maybe we should rename that. Anywho, um, I'm not out to change anyone's view of the world. I'm not. Nope. You can have any view you want. You can do whatever you want to do. You can do anything you want to do with your money. But if you want to learn to trade the markets, if you are as skeptical as, and I'm very cynical when it comes to the markets, very cynical. I mean, um, they're rigged. No question about it. No question about it. That's what I said to Susie, 24 years ago. And we were in the markets even before that, kids, right? So Susan and I were buying stock before we had our one bedroom apartment furnished. I was buying stock. So it's like, what are you doing, Don? Well, Susan, we're going to be independent and we're going to be able to do our own thing when we want to do it. So we had a dinette set, a bedroom set, and IRA accounts in stock. I had my priorities. Um, so time is certainly on your side if you're younger. It certainly is. But don't waste it, kids. Don't waste it. And if you're thinking that, oh, I'm going to get involved in this game when I retire, I don't know about that. Maybe, maybe not. You know, um, if you can, I mean, I had a pretty demanding gig and I found the time, I made the time um to learn and to stay up with things. Um, I think that you want to do that because if you suddenly find yourself and you're out and you think, okay, I'm going to sit down and I'm going to start, you may have actually been buying and selling stock very, very successfully over the last, 25, 30 years. But trading intraday or intra-evening or active or trading futures is a whole nother animal, man. I mean, this is you know, less than 9% of the American investing public even trade futures, right? So it's not trying to spook anybody away by any means, really trying to inspire you to learn from somebody, from someone, because it's a great way to go. It really is. And so, any case, any questions, be sure to visit the site. I'll put this little note down here. And now there'll be plenty of podcasts telling you, why, the market's selling off. Like you say, last week it was because of the AI. Remember that? Because China had some company that had an AI platform and that upset Nvidia. And then I'm sure tonight it's the tariffs. That's probably the story there. Um, it's just they never ask why when the market's going up, only when the market's going down. Be sure to visit our website to learn more. For those that have been here a couple of weeks, do you remember me telling you the story about the king who killed his nephew? Do you remember? Does anybody remember why the king killed his nephew? It was like 2 weeks ago I told that story. Anybody here that remember? Let me know. Enjoy. That's okay, Alex. I just was testing the waters if anybody could remember. And I'll tell the story in a little bit. But yeah, 1991 was a long time ago, right? It seems like just yesterday. Um, you know, you're not and I'm not. Don't think for a moment. A lot of people, history, financial history, market history, history period, begins with their life. Um, there are some people that came before you in me and with the same or similar aspirations and dreams and wants and desires and tools. Well, they didn't maybe have all the tools, but and they did different things. Some of them did really well, some of them did really poorly. Some of them made mistakes, big mistakes. And if you do go to these buildings, there are in most towns of 30,000 or more, usually, there'll be these buildings in town. There'll be brick buildings, stone buildings. And if you go in there, they got these stacks with these things on them called books. And you can actually get these books. And they'll tell you the stories about these people if you check them out and read them. Absolutely fascinating. One of them is, I don't know, man, it was written in the 1920s, 1930s. And I'm reminded of it again tonight. We talk about it, we mention it a lot. It's called The Madness of Crowds. The Madness of Crowds. Think about that. What do you think that book's about? The Madness of Crowds. Do you think sometimes when people get in a crowd, they do some maddening things or some crazy shit? Think we've seen some examples of that in Minneapolis and in Oregon or Washington out there with the tree huggers or in other places. Well, the book isn't about that. It is about the the bubbles centuries ago. Centuries ago. Do you know that there was the tulip mania? Because when the tulips, when they discovered the tulips, they could develop a tulip that nobody else could have that exact tulip. Only the person who designed that tulip. Scarcity. They were like, well, I got to have that. And there was a mania. Sound familiar? A mania to own those tulips. Sounds silly today. You kidding me, Don? Oh no. No, I'm not. The South Seas plantation bubble, all kinds of bubbles. I was reading that book in the 90s because it was new to me then, but it had already been around. And I was trying to, I'm like, this NASDAQ has got to be a bubble. Has to be a bubble, sweetie. Talking to Susan. These companies don't have any revenues. They don't have any earnings. People have lost their friggin' minds. Now, we had been involved in the markets before. We were getting a hell of a run. So I heard somebody mention that book. I went and read it and said, oh my word. I guess I'm not the first one here to see this sort of thing. So go get it next week or order it. The Creature from Jekyll Island. Did you guys hear, now no one's going to be saying this. And I don't, you may not even know this story yet. Everyone's going to be telling you that the market is selling off because of the tariffs. Right? That's probably the big story. But what if it isn't, right? What was this, and what if the sell-off last week wasn't about the AI thing? Because I didn't think it was. I think it was something else. Do you know what happened? I think it was on Saturday. Did you hear? Did anybody report on it? Did anyone else read this story? Did you know that Doge, Elon Musk outfit, Doge, started to track some of the money flowing out of the US Treasury? And the Secretary of the Treasury of the US under Biden was that little munchkin Yellen, right? So she hit the road. And what Trump did just temporarily put in the most senior bureaucrat at the Treasury in that post. Guy wasn't going to be staying there, but he was going to just, park his ass there until Besant, who is a traitor who was appointed by Trump, became Secretary of the Treasury. Well, Musk and his cohorts discovered that there's an account that has just been auto paying, auto paying trillions of dollars to people and to institutions all over the world. Trillions. $6 trillion. 6 trillion. And they wanted to know where some of that money was going or all of it. Because it was actually going into, some of it was going into the hands of, get this, some terrorist groups. And maybe it was going into the hands of some of the friends and family. Trillions. So they told that son of a bitch, run an audit, give us access, and we're going to audit that $6 trillion. Guess what he did on Saturday? I'm out of here. See ya. Gone. I'm out. I'll be I don't know, I'll be down in Argentina someplace. He's gone. They're going to audit that. Last week, when they were all talking about AI, I was talking about the guy that they just charged. They got an advisor to the Federal Reserve. This guy was doing TED Talks. Apparently, he's been selling Fed secrets to the Chinese, and he's just been charged with espionage from our central bank. Do you think that could have had some shit to do with the sell-off last week? Do you think the two of them could be? I don't know. I would be more interested in knowing that because you see, folks, what if, what if they've been just just printing money, just sending it out like a bubble, and it's just going out. Now, what's going to happen if they find it and they shut it off? Then what's going to happen? What's going to happen? Hmm? You know what? We may not have any more inflation. We may have a deflation. We may have a rapid deflation. I don't know. But I'm more interested in that. You've got to do the Google search on those stories because no one's even talking about them. And I'm more inclined to think that that's more on point. But you know what? Maybe it's something else too. Things are happening really, really fast. And one of the things that we all know this instinctually, we also know this from history, is power and absolute power, can corrupt. And we're I think on the verge of one hell of a purge, and it's going to be incredibly volatile, which is for traders is fantastic. It's fantastic, but it's craziness. The what was the other story that wanted to share with you? That'll come to me. I'll have to give it some thought. I forget now. There was another one, but those are two stories that aren't getting much play, and I think they're very, very important. I mean, I think the one with the U.S. Treasury, the 6 trillion. Now, I'm not saying all 6 trillion was going into some sort of somebody's Swiss bank account, but it was going into somebody's account. Not all of it. I mean, some of it was going to Social Security, blah blah blah. But they were all. How about Zelensky today? Did you see Zelensky? He says in an interview, he goes, "Well, I know that Congress is saying that they sent $150 billion to us, But I can only tell you that we only got 75. Oh, so the 175, the 180 billion that the Congress says we sent to Zelensky, um, where's the rest of it? Where is the rest of it? Do you think Trump's going to find out? I think so. I think so. It's going to be pretty embarrassing if guys like Gramnesty and Schumer and the rest of them got Swiss bank accounts of their own. Do you think Trump's going to cut them a pass? I don't think so. I don't think so. No. Nope. This dude is he is moving so fast and is so out there that I think we're getting a better idea, of why they wanted him out. So there's going to be and when these things so when the spigot could slow down, the money flow is going to slow down. And Warren Buffett's got the old phrase that, you know, when the tide goes out, you find out who's been skinny dipping. You find out who the crooks are. You find out what companies are making money, what companies aren't. You find out which politicians have been ripping us off, which advisors. But imagine an advisor to the Federal Reserve, doing TED Talks and everything else, has been conducting economic espionage with the Chinese for which he just got arrested. Why that isn't a top lead story everywhere. All they want to talk about is the airplanes, and then the top bureaucrat at the US Treasury quits on Saturday because he doesn't want to run an audit at the US Treasury. What about the audit on the Pentagon? Psh, man alive. So, any case, great time to be alive, kids. Really great time. And you know, and if you've been spending 4 years at one of those madrasas of the left, right? That's these so-called universities and colleges. Welcome to the real world. Um, we're ready when you are. But they're not going to those places. They're all well and good. I hope you have a good time. I hope you have a great spring break. And but if you're studying to be a broker or a broker, um, good luck with that because in about 5 or 10, 5 years maybe they're going to go the way of a buggy whip. Um, I'm not sure they're preparing you for the real America. And this is real. We built Stock Market Caddy as uh, it has a moniker of a game like, but it is much more than a game to us. We're very, very serious about what we're doing. Very serious. And it is not trivial. It isn't, it isn't. We try to make it fun. I didn't want to equate it. Doge is getting smoked. I'm not sure what that means. I'm not sure what you mean by that. But this tool, Swing Machine Plus, is only one of about 70 tools that we have today. Um, and we're basically a mentorship. We have a monthly membership. Doge. Oh, Doge coin. I thought you meant Doge. I thought you meant the Department of Government Efficiency. Doge, the coin. Yeah, I don't. Kids, I, if you want to buy and sell crypto, have fun, have a blast. Um, I just don't been there, done that. I know what that stuff is. Um, in the 1990s, it was Beanie Babies. Um, so we like to trade futures intraday because they're highly liquid. They're leveraged. That's where the banks play. and and we trade options um, when we go out, 35 to 45 days. If we're going to invest, if we are going to invest, we're going to do so um, when we go out more than a year. So we will. But if you have any questions, let me know. And but I can only imagine. I haven't looked at any headlines, what the story is tonight. But I think that this this the government slush that has been going on, and he's shutting it off. He is shutting it off, and near term, I think when you understand that this is all about money flow, when you get an expansion of money supply and money flow, then it's conducive for bubbles in everything, in assets. When you reverse that and you pulling back on it and bringing it in, um, the bubbles, will contract. Now, some will do it, but they've yet to do it, right? It's never in economic history ever have there been a contraction of a defined bubble in a control burn. It's never happened. They always crash out, and I'm talking significant crash. Um, so this is just right now a little bit of a control burn, and I'm not saying we're crashing or anything of the sort. I'm not going to go there. You got to remember in 1987, and I was there for it. So I'm an older guy. 1987, I was just a young pupper. But the market, the market went down 22% in a day. 22%. So that would put in a day, that would be 10% on the NASDAQ would be 2,000. That'd be like about 5,000 points in a day. Did they have? No, they did not. That's a very good, they did not. They didn't have circuit breakers in 1987. They do have, so they have a lot of things that so this is you know what? We got a few people here. I'm going to go ahead and show you this. Let me show you something. I think you get a kick out of this. Let me bring this up. Um, Bear with me. Hold on. I'll bring it back into view. I want to get a chart. I want to show you something. Hang with me. Bring this back into view. We do this and blow this back up. Okay. So we're going to put this on a specialized chart, and I'll show you what this is. And we're going to go back like 30 years. I want to just do this for perspective. And no, they probably haven't. I mean, if they haven't been around, since, they want to say '08 was a bear market, but I really, that's kind of a silly. Um, so I'm going to go back on a monthly view. Excuse me. I'm going to go line break. I'm going to do something called a line break, and I'm going to do this um, on a monthly, and I'm going to go back 30 years, 35 years, 35 years back. This is the NASDAQ. All right. Do you see this chart? You guys like to see charts, right? This, let me get a marker. This is a monthly chart of the NASDAQ on something called a three-line break chart. Let me widen this out. The year is 2000, right in here. So this is the 1990s, and we were doing, fabulous in the 90s. It was a great time to be alive. And in 1999, I got to tell you, we knew it and certainly felt like a bubble. And unfortunately, Susan and I were mostly out of harm's way. Got out a little bit early and then it came in. But what I want to show you is this is perspective. This is the bubble of 1999, then the dot com. Isn't that was horrible, right? In 1999, the Nasdaq got to split adjusted. The Nasdaq got to 5,000 and like 35. And you got to remember, we had the promise of the internet. Everything was .com. Glasnost, the Berlin Wall was coming down. Russia was breaking apart. Viagra. Viagra was just invented by Pfizer. We had 7,500 public companies, IPOs. I mean, it was rocking and rolling. We were running around with these phones in a bag. They were called bag phones. Oh, it was phenomenal. And believe it or not, we had these other things. I can remember buying a company called 3Com. I bought 1,000 shares at $10 and it went to 100 like in 2 weeks. And you know what they made? They made something called the Palm Pilot. It was a little device you held in your hand and you went tapped it, and it was an automatic calendar. Can you imagine the technology? Then we had people, they loved this company. They were, oh, yeah, I can't, I never owned shares in it, but anybody, they were not going to sell it. They were hodling it. They're still hodling it. You know what the name of that company was? Your dad had a Palm Pilot. Sure, he probably had stock in it too. The stock went to like a buck or nothing. Went bank. The America Online. Remember that sound? America Online. There were people who bought America Online, and oh, that stock went to like $200 a share. It was going to take over the world, and it all went to shit. We didn't see the old highs in the Nasdaq until now. By the way, this is the .com crash. Do you know what this is right here? This is a little more recent. You know what that is? That is the crash of '08. Can you imagine? That was, if you listen to Chucky Schumer, that was worse than the 1929 Depression. That was the worst crash. Oh my God, it was awful. We had the Fanny Boys, you talk about corruption. You had Barney Frank. Remember Barney Frank from P-Town out there in Massachusetts? And he was putting in his partner, and he gave him a job at Fannie and Freddie, Fannie Mae, and that's where they parked all their friends. They just gave them jobs. They were no-show jobs. They paid 200,000, 300,000, and it was a big scam, right? But that is the '08 crash. So this is the .com crash, and this is the '08 crash, the mother of all crash. Oh, I mean, just awful. What the hell is this? What's this? Well, this is jury rigging. This is where they let the banks not have to mark to market anymore. And then they they're not buying S&P futures. No, no, they wouldn't do that. They're just going to buy bonds. They're going to buy treasuries called monetizing the debt. And then we have QE1, QE2, QE3, QE4, and then we do Operation Twist, and then we do that for like 10 or 15 years. So yes, you could have a broker or a broker, and if he's like, 30, yeah, just, go buy some stock, because the market goes up. I mean, you can't time the market. Yeah, okay, kid. Okay. So what's this? In 3 weeks, the market took a 30% dumper. What was that? Well, they'd have you believe that that was COVID. It was COVID. It was COVID, but I don't mean to give you anybody a headache. But do you think COVID was an accident? Huh. Many people don't think so. Many people think like the bubble was like in very serious trouble and that we needed something to kind of bring it down a little. maybe a virus, maybe, So in 3 weeks, we fell 30%. 3 weeks took a bunch away. And then they stopped it. They stopped it on a dime. The S&P went to 2021. And now think about what was going on. What did they do? They told everybody to stay home, right? Stay home. You don't have to go to work anymore, right? Just stay home. And we're going to send you this time though, we're not going to just buy bonds. We're going to do that. We're going to do the QE again. But you know what? This time we're also going to send people money. And that was their mistake. Because see, when they did this these QEs enriched the billionaires and the people who owned assets. But when they shared the wealth with the people and they told them to stay home and they sent money to them and they did QE, they relaunched the market again to new all-time highs. And here we are. We got this little thing going on now. Little thing here. But what did it do? It created inflation. Yes, everybody had tons of money. They were joining, things that they didn't think they would join, boating clubs, camping clubs, getting a second trailer, going on cruises, and guess what? We don't have to work. We can just stay home. I mean, look at the federal government, right? Those guys are still sitting home. We can just stay home. And that's why the problem is, though, the problem with that is eggs. And now, 20 bucks a dozen, joking, but what are they, like 7 or 8 bucks a dozen? That's created the inflation. So that's a problem. And so here we be. Now, I'm just going to tell you, I don't know if this is the start. It might be. It might be, but you know what? We don't trade on a monthly basis like this. It offers great historical perspective. Because if you had bet against it here, you would have just been, roadkill. So it's very, very difficult to do that on a long-term, big bet. We don't do that. We trade, intraday, very, very short term. We're basically quantitative quant analysis traders. But I offer this as perspective because I can tell you from peak to trough here, the Nasdaq went from 5,000 to 900. It went down 90%. 90. This one went down, what about 60 or 70%? And this high, I can't draw a straight line, but this high on the Nasdaq did not get taken out for almost 10 or 12 years. But it didn't do it with the same companies because a lot of those companies like Global Crossing, America Online, JDSU, you name it, 3Com, they all went bust, right? They all went away. And now we just do this, we just go, to the moon. And what are they doing up here? Oh, they're buying everything, they're buying meme stocks, they're buying Doge, they're buying crypto, because, it's just um they were doing it over here in this run up here. They started buying Beanie Babies. That's how eBay got started. The people who started facilitating the purchase and sales of Beanie Babies, that those are the people who founded eBay. eBay, basically, a yard sale online. You know? So this is where we be. And we can look at these types of bubbles, and there's a psychology for this. But I guess as we're up here, nobody knows, right? It could continue for months and months. It absolutely could. And it could just pull back and we could keep doing it. But if you're up here and you're in these markets and you don't think, this is my point, you don't think the market can come down 90%, you're crazy. You're crazy because it can. It absolutely can. And I remember over here, it was 1999, and I have a computer. I have a personal computer. Not many people probably did, but we did. Susan worked for, IBM and way before Lotus. And I'm looking at a screen, and the NASDAQ is at 5,000. And I'm talking to my brother, and I said, my brother Mike, and I said, Mike, there's a gap down here. And he goes, where's the gap, Don? It's down around 900. And you know what he said to me? Jesus Christ, don't tell me that, brother. I said, yeah, yeah, it's bad. Yeah, it could be really bad. No, didn't know. You couldn't even, they wouldn't even allow you to short back then. You had to use options. They didn't allow you to short. We went down and filled that gap at 900. We absolutely did. And there was other bullshit being done in here. So we could go back even further. They didn't have this futures contract, to go back to 1929. They changed the rules. They absolutely do change the rules. And lost my voice there. Um, but don't be fooled. The circuit breakers are not there to protect you. They're not. No. The circuit breakers are there to protect them. Who's them? The club. The club. But they're not there to protect you. Because let me, when in 2001, the markets were closed for 5 days with 9/11, but um if anything really, really bad happened, and this can happen in the corn market or in the bean market or in anything else, but if anything really, really bad happens and the market gaps down 10% by the morning, and I'm not saying that's what's happening here, so please don't not, spreading that's not what I'm saying. But what would happen is the market would open, there'd be like one trade and then it would close. And I may not have the exact percentages, but I think it's like 10%. But it would open again the next day. It probably even be more worse, but it could do that 2, 3, 4, 5 days. It absolutely could. And and then it will finally stay open when there are buyers. So that could be 30% down, 50% down. I mean, it could be wherever. So just because you have a stop on an ETF, you're not obligated to get that fill. So I hope you know that. You're not. There are such things as banking holidays. So just, be aware. Be aware you work very, very hard for your money in your retirement accounts and everything. And yes, I know your brokers are going to tell you, if we use Fibonacci here, let's just do this. Let's go to the drawing board. Um, a Fibonacci retracement, price retracement lines. If we go to the obvious low, which was down here in '08, and this is all engineered, and we go up here, if this is the high, the normal retracement would be 50% right here. I'm not saying that this is going to be the top though. I mean, it could have been, you could have done this 3 months ago and we're still going higher. So we could still go higher. I mean, the madness of crowds is incredible, right? I mean, they can really, really do some stupid things. But that would be 12,370. What would happen is, though, the way that this bubble would unfold, if it is here, if this is going to go this way, the way they go is you would roll, show you, you'd do something like this and you'd roll down and you'd revisit that and then you'd roll back up. Okay, it would probably hold. And then you have the really, really dumb people, the people who didn't get involved anywheres in here. Because see, like over here, these are really, really dumb people too. And I'm sorry, I hope you're not one of them, because there were people who bought right here and they never got involved down in here. They never even got involved here, or they never even saw the 1990s. They don't know nothing, but they bought here. So what happens is they roll down And then there are going to be people that never participated in this, and they will buy. And then these people, there are people who bought up in here, and they will have the bejesus scared out of them. And they're sitting there like, oh my God, I knew it. I knew I shouldn't have got involved. As soon as I got in, this market was going to tank. So, Martha, as soon as we get our money back, we're out. Well, that's called overhead resistance. Then what happens is we'll come back up. And this guy's waiting. He wants his money back. He won't get it all. He'll get a good portion of it, but he won't get it all. This guy thinks, woohoo, we're on it away. He just goes back asleep. And then it doesn't quite get there. And we may even do something here on a monthly basis. We don't know the shape and what it's going to look like. We'll leave that to the armchair technicians, which we're not. This is not what we do. I'm describing the psychology of it, right? We use algorithms intraday, very hourly, very, very close on our money flow. So this isn't what we do, but the psychology is. And then what it will do is it'll do something like this, and then it'll roll, and then they panic in here, and then the bitch goes on down. And this is like 70, 80%. This would be at 7,000. And if this doesn't hold, if it and there's anything there, this is where they panic. They don't panic up here. They don't even panic in here. They panic down in here. And that's what pushes something potentially, puts it right back to where it started. Now, if you're watching this and thinking, okay, woohoo, I'm going to sit here with all my money in cash and I'm going to wait because, man, it's going to come. Well, it won't be as smooth as this. And by the time we get down here, you're going to be scared too. Everybody will be scared. Bagger won't be scared. Our members won't be scared because we'll be trading our little asses off. And, it's like, you get some vicious, vicious rallies during bearish phases. But what I want you to know is that even if it, does something like that, I don't want you to think that it's obligated to go back up here. Because guess what? It took 10 years for the NASDAQ to get back to where it was. In 1966, from 1966 to 1981, the S&P ended where it started, 16 years. So if your style of investing is, well, I'm going to just wait for the big crash, then I'm going to get involved in it. Well, you might have to wait 20 years, for some sort of a, rally back up to the highs. And maybe you got that time, maybe you don't. Everyone's got to decide for themselves, where they are. The problem is when you're young and in your 20s, usually you don't have the money to invest for the long haul. And when you're in your 40s and 50s, you got the money, but you don't have the time to put it back if you blow it. And you don't want to blow it, right? You don't have to get rich twice. You only got to get rich once, but you're going to have to work at it. So, any case, perspective. It's not what we do. So I'm going to get away from this. I'm not trying to say that, that this is the big one. Um, Nobody will know. Um, Yet everybody will know, right, after the fact. Even today, that if you go to one of these madrasas of the left, these so-called universities, and you get into an economics class, they can't agree on what caused the dot-com. And that was 25 years ago. They can't agree. They can agree a little bit on this one, but I mean that was nothing. And I hope you didn't get hurt with it. It hurt the real estate, but my perspective, it was absolutely a big nothing. It was nothing. But this is insane. So let's slide back. Um, we just, you know, we just trade and we extract the cash flow. And if the United States currency is dollars, then that's what we collect, and then we distribute from there, what we, want to try to hold value. If it's going to be something else, the way Trump's going, who the hell knows, right? Who knows this guy? Um, oh, there was speculation. I found this interesting too. This is why I was thinking 1913 was stuck in my head. Um, Trump's talking about he's been throwing it out there. Okay, he's already got if you haven't heard tonight, he's got the Panama Canal back in our grasp. That's all of about 2 weeks. He's talking about ending the income tax, and that's possible, folks. That is possible. Now, when did the federal income tax come into being? 1913. We didn't have a federal income tax before 1913. But he has the power. The Republicans have the power. They could do away with the federal income tax for a period of 10 years. And there's a lot of speculation that that's what he wants to do. And he wants to use the power of this tariff to raise our funds. Could be very different. Now, if you're in another country listening, I don't know. I don't know what to say. There's going to be, but things are changing here. Um, Also in 1913 was the start of the Federal Reserve. This guy that they just, shit canned, advising the Federal Reserve, is that a precursor? You know, we have had periods where Andrew Jackson, he did away with the central bank here in the United States. No one's mentioned that yet, but if he's going to do away with income tax, could he do away with the Federal Reserve? Could, could. So very, very difficult to make long-term conventional investments in just about anything when you have the prospect of major, major upheaval in new things, in new technologies, right? I mean, why in the world do we need a Federal Reserve to, manipulate interest rates that create these bubbles when, we, just let the markets be the markets. They'll take care of themselves. They'll self-correct, and, it's my 2 cents. So we're not going to add to the confusion or the narrative of what's going on here tonight. But I couldn't help. There's a few extra people here tonight, a little bit more than usual, maybe because of that. And they want that explanation. And I'm not gonna, jump in on it, just to say that we just assume that we are the most ignorant folks in the room, and that people who have billions and billions and billions of dollars, that they have the insights, they have the tools as well. And if we track their footsteps, their elephant prints, and trade in and out around them, we're going to be just fine. We're going to create our cash flow. And if you can create more cash flow, then your needs and wants, then you, my friend, are wealthy, right? We're trading as a business. We're creating cash flow that is beyond our needs and wants. Now, if your needs and wants are a yacht in Monte Carlo, well, um, you're going to have to get on your horse, and you know what? I'm not going to say you can't do it. I'm not. The most successful investor of all time, look him up, Jim Simons, not Warren Buffett. No, Jim Simons. He was 41 years old. And guess what? He was an intraday trader. Hmm. Active. And he thousands and thousands of percent better than Buffett. So if you want to adopt and believe the CNBCs of the world that you cannot trade the markets, you cannot time the markets, okay, fine, believe them. Believe them. I don't know why you would believe them. I don't believe anything else they say. And I didn't believe it back in the early 2000s. And before Trump, I said to Susan, I said, this is all faux. I used the word faux, F-A-U-X, French, faux, fake, 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 fake. Seinfeld. Enjoy, folks. We'll let you watch. I got to get back to work. Any questions, let us know. I hope you that chart we showed you is a three-line break chart. We can trade that, even we can even trade that down to, seconds or tick level. Um, but I slowed that down monthly and went back 30 years just to give you a perspective. Takes time, right? Takes time. You can learn to trade the markets in a relatively short period of time. But your market history, your market perspective, you need to be able to experience. And that's what's dangerous today, because I think it was Carrick's mentioned that a lot of these folks that are here have never really experienced the bear market. They're phenomenal for traders, phenomenal, but they're absolutely debilitating for anyone nearing retirement. They are quick, vicious, and just will hammer. It's like nothing you've ever seen before. It is like a tsunami, right? It just doesn't, and it just keeps coming. You'll know you're at the end of a bear market because nobody will want to tell you or talk to you about crypto. Nobody will even want to admit that they put any money into it. That's when you know it'll be over. In anything and everything, it can happen. And it most certainly will happen. We don't know when, but with our tools, and we got quite a few tools, as I say to all of our members, if they, get them on their desktop and get it built out, it's impossible. It's impossible for the market to get past you. It may sometimes just be difficult to believe your lying eyes. And also, it can be difficult to, get the TV out of your office, turn off CNBC, cancel the Wall Street Journal, cancel all that shit, get rid of it, put earmuffs on, and learn to fly, technically, fly under the hood, right? They call it, and get the job done for you and your family. If we can help you on that front, you let us know. Enjoy. If you got other books you want to read, is down 100 points. Yep, Naples fan. Yep, yep. Any questions, let us know. Other great books, The Creature from Jekyll Island, all of Jim Ricketts. He's terrible timing and he's a terrible trader, but he writes a great book on currencies. Jim Rickards, all the currency wars and all those books. It used to be a trilogy. Now he's got 5 or 6 of them. You want to read them all. You want to read David Stockman's book, The Great Defamation. You want to read there's another book written by a woman, I can't remember her name, called The Forgotten Man. You want to read that. Um, um, damn, darn, I have to come back to ES from options. Um, I'm not sure what that means, Dan. If you're talking, the problem with getting the options like tomorrow now is the implied volatility is going to have spiked on the options, and you guys going to pay daily for them. We were getting options before last Sunday's turn down, and then as we rallied into last week, we were just loading up on our options. That was a great time. It's not the first mouse. You don't always want to be the first mouse, right? You want to be the second mouse. It's the second mouse that gets the cheese, right? Same thing, at the oasis, in the desert, right? You may not want to be the first one to take a drink of that water because there might be a crocodile in there, right? You don't want to maybe be the first one. And it may be poisoned, it may not be fresh. But you see a few other animals over there and they're drinking from the oasis. Then you say, hey, let's go nudge over there and get ourselves a drink. But you also don't want to be the last one because you stick around that oasis with everybody else drinking that water in the Serengeti plain, and the lion's going to eat your ass and they have dinner on you. So you don't want to be first and you don't want to be last. We play for the middle and we get a drink of water and we move on. We're traders. We don't use a website. We where we trade our futures with TradeStation, and then we have other brokerages that I won't name that we just do for diversification, and we trade options with them. But we're huge fans of TradeStation. So the TradeStation is based in Plantation, Florida, but they're owned by Mitsubishi Bank out of Japan. They're phenomenal. We think everyone else is more or less of a toy. We can trade, this is the thing. We can trade, and this is Swing Machine operating on their proprietary product called Radar Screen. This is just one tool. Swing Machine is just one tool. But these trades can go in, robotically. Not all of the brokerages will allow you to do that. And a number of them are never going to allow you to do that, even here in the States. If you're in another part of the world, you want to find out if you have access to TradeStation. If you have desires to go through what we call our Q school and become an annual member, you have to have TradeStation for these our tools to work on their platform. Um, and you can, we can and we do, of course, trade stocks and trade options. Um, yeah, no, yeah, no, no, no. Robinhood is what it is. No. We are algorithmic traders, right? We're trading for a living. We're not just, throwing on options to make some mad money. In our view, I haven't seen the Robinhood thing, but I would consider it a toy, a toy. Um, and a lot of other brokerages too. I'm not going to name any, but TradeStation is a surgical tool. This tool, I just want everyone to know I started to go there. We can change the intervals, right? So on the 5 minute, yeah, it did it, at 125. It was around 1 o'clock on Friday that the market really started to turn down. But I do want you to know, as an example here, I'm going to go ahead and do this. Let me just show you something. We can change this to a tick, 10 ticks, 500 ticks, which would be transactions, 1 minute, 2 minute, 5 minutes, 60, and any number. I can put it on a 60 minute. So on a 60 minute, it went short it was at 5 p.m. on Friday, still Friday afternoon. There's your 10 grand on an hourly basis. Um, so I'm going to put it back to five. But what I want you to know is, see, this this also can send you. Now, we don't send out alerts, right? But if you have these tools on your desktop, you can program it to send you alerts. So it could be running at your home computer, and you could have it send you customize the alerts, and they go right to your phone or to wherever you are. We can also get the machine. Um, Now, all these trades are live. This is calculating these trades. This is the trade that we are in, right? So we're not in all of these trades. No, we're not. But many of our members might be. But we're in on the ES. We have options going out into March. But you can get the machine to trade this. You can get the machine. We can trade, for instance, we could trade the 1 minute in the direction of the 5 minute, which we do a lot. We can get the machine to do that. We can get the machine to trade the ES based on what the VIX is doing. We can get the machine to buy and sell the euro based on what the dollar is doing. We can get the machine to buy and sell Bitcoin based on what the NASDAQ is doing. By the way, the Bitcoin represents 5 Bitcoins, the futures contract. So if you owned 5 Bitcoins, congratulations to you. It would have been over worth on Friday afternoon. It would have been worth 500,000. But the signal came in at 12:10. You can't quite see it on Friday. So, if you want to hodl your Bitcoins, you hodl them, but you could have come in and shorted one futures contract against your stack, and you'd still have your Bitcoins, but you'd still have $47,000 in value. That's called hedging. That's what hedge funds do. That's what we teach. I'm not going to do this for you. No, I don't think you understand, Laha. Um, yeah, it's not hypothetical. It's real. Um, so I don't, it's difficult for me here. I can't be here all night, but we do teach, right? So, but I can't do that in a short session on YouTube. We encourage you to visit the website. The reason why we punch up like this is to show folks what an algorithmic trader is looking at and how they approach their business. And so that if this resonates with you and this interests you, then maybe you'll go visit the website. And then if from there you still got questions, you want to reach out, you're welcome to. Um, but for purposes of right now, this this is showing us the trades that would have been presented to our members based on a 5 minute chart. Are we currently short silver? No. Are we currently short gold? No. We are short one futures contract on the NASDAQ that we put on Friday afternoon. That's it. But these are other trades. So for instance, if you wanted to be trading the S&P as an example, and you wanted to be trading it at a 1 minute level, at a 1 minute level, she's actually trying to bounce. I'm not suggesting anybody take that, but there is a skill set to doing this. I don't want to also give anyone the impression that this is red light, green light, and that you don't have to have any acquired skill. That is, what is that? Because he cheated on his family. I think Scotty's smoking some weed. Because he cheated on this guy, he was sleeping with his. Oh no, no! I'm like, no, you're not, Scotty. He remembered. He remembered. I'm sorry, that was rude. All right. Scotty's got it. He's correct. About 2 weeks ago, 2 weeks ago, I told the story about why the king killed his nephew. And as I explained in the story, the reason why the king killed his nephew is because when the king went out to fight the bad guys, he left his nephew in charge of the castle. And he said, "Look after my family and look after the castle while I go to battle." When the king got back after a few months, come to find out when he got back, his nephew had been sleeping with the queen. Off with his head. He killed the nephew. The story is a narrative. Our minds as people, as humans, the way we remember things, stories, stories, narratives. Wall Street and Madison Avenue and even your universities are playing on your minds. They're telling you stories. They're telling you narratives. They're fighting for your attention. They're fighting for your dollars. And if I had simply just said the king killed his nephew, 2 weeks ago, Scotty, sorry about that. Scotty's like, what is he talking about? um, he wouldn't have remembered. But because I attached the story of it, fairly interesting one, he was able to remember 2 weeks ago. In fact, he'll never forget. So, um, but we don't trade or invest on stories and narratives here. We track money flow. Enjoy, everybody. Thanks, Scotty. Sorry about that. I didn't realize what you were responding to. Thanks. Now, I don't know, Scotty, exactly what you're doing. Thanks for winning the contest on why the king offed with his nephew's head. And I will be back in about 30 minutes or so and answer other questions, but um, you can't control the market. So you have to just let that go. The market is going to do what the market does. The only thing you can control is what you do. And there's a lot of things that you can do. It's just that you're not aware of those things. Most people aren't. You're not aware of what you don't know. And I mean this in the most polite terms I can say. It's the first step of learning anything is recognizing that there may be something I don't know. So for instance, I can tell you this, the NQ, the NQ, had you had this on your desktop and had you taken the trade at 125 on Friday, yes, you would be up 14,500. I mean, you would be. But the likelihood that you would do this without, proper training, without the proper education is probably slim and none. And the reason being is you're going to listen to your inner ear. You're going to trade on fear and greed, the money. I'm up 1,000. I better take it. I'm down 500. I better kill it. And so these tools are like the cruise control of an airplane, but you have to have flight time to fly these planes, even as sophisticated as they are. You need to have good trading education and good acquired trading skill to operate these tools or to exploit these tools. I'm not trying to give anyone the impression that you can just jump the shark and just, I mean, you may have the money to go out and buy yourself a small plane, right? Um, I mean, would you go get in the plane and start flying it around just because it has a cruise control? I mean, do you think you can learn to fly a plane watching a singular YouTube video? Or do you think you can learn to play golf by watching one, video? But you got to be very, very careful. And I'll say this to everybody, and I really do mean this. You can't talk your way into doing something. You can't say, oh, just being positive is going to get it done. Um, Whatever that something is, right? It may be trading, it may be golf, it may be, I don't know, anything, right? But if you are telling yourself, every time I zig, the market zags, or every time the market zags, I zig. You got to be careful about that because what you're saying is, I always get it wrong. And if you talk to yourself that way, you know something, you will always get it wrong. You will. You got to be very, very careful. The mind, the mind can take you to doing things that, you don't want to do. And all we can do is make you aware. I'm not a psychiatrist, don't pretend to be one, but we're all about, you know, using the machinery to get the job done or fly the plane. Pilots talk about it listening to the inner ear. Now, I don't know what the hell happened to that plane that, fell, you know, thousands of feet in Philadelphia straight into the ground. But, um, you know, they can sometimes, be listening, they get space, what do they call it? Spatial, um, is it, spatial disorientation, right? And when you're looking at these charts, on every brokerage, you set up the chart and that's all, and then you read candles, and all of a sudden you start getting spatial disorientation. But you're not crashing a plane, you're crashing your account. So it's an acquired skill set, and you can learn it. You most definitely can. Hi everyone, it's Don. It is, let's take a look. It's just about 9 o'clock. Maybe I chased everybody away. That's okay. A lot of folks just want to pop in and want to know why, right? Want to know why. Why is the market going down? That's the rational side of your brain. Um, the sooner, the sooner you learn, and it is learned, it is acquired, that you just don't even ask yourself that. You just kind of take it off the table. It's kind of like playing golf too, right? If you can just hit the golf ball from left to right or right to left, you can then just kind of take one side of the fairway out of play. So when you stop paying attention to the news, the narratives, then you can make your trading life, your investment life a hell of a lot easier. Hell of a lot easier. But you gotta, learn to do that. And you got to learn. The first step is becoming aware. So we're going to try to make you aware of some things, especially during Q school. Then we're going to try to give you some tools so that you can begin to practice and to work on some things. And and what we what we want to help you become is consciously competent. You're very aware of what you're doing and you're very good at it, but you have to work at it. Ultimately, you will become unconsciously competent. You'll be doing things in the markets and trading, and you won't even be thinking about it. You just do. You just react. You just do it. Just like brushing your teeth, just like driving a car, just like anything else in life that you've become proficient at. And you all have. You've got things that you do. We were talking to a gentleman last week, and he's a professional, sounds like a professional cabinet maker. He's doing things with cabinetry and wood that he doesn't even think about. But if you're new to it, you don't know what you don't know. When it comes to me, I couldn't make a cabinet. Psh, kidding? I don't know anything about it. I don't know how to do it. I don't know, you know. That was something that really, really interested me, something I really, really wanted to do, and I had a passion for making cabinets. I'm going to go find myself maybe that gentleman and find out what he knows. And can he make me aware of what I need to be aware of so that I can, maybe consciously really work at it and become a consciously competent cabinet maker? Maybe after doing it for a little while, years, I might become unconsciously competent and maybe begin to mentor others, maybe. Um, but I can't give folks no more than the cabinet maker. I can't give you confidence. Confidence is derived from successful execution experience. That's where it comes from. So, any case, any questions, you let us know. And in the meantime, continue to give you. Now, you are on a delay from YouTube. So we do these sessions not to prove an outcome. We're not. I didn't know the market was going to gap down. I had a pretty good idea that it might, right? Especially after last week. We were pretty confident that it was going to gap down last week, and it did. Didn't think it was going to go as much as it did, but it did. What are you doing, Abby? What are you doing? We got two golden retrievers here. And what's going on? What are you doing? Are you sniffing? You looking for food? She's looking for food. Hey, Ab. I might have to run her outside real quick. I'll be right back. Okay, everyone, sorry about that. And let's just take a peek at again, this is the S&P Rinko. So this is very, very bad here. We're revisiting. This is the low that was put in last Sunday. This was Sunday night, 23rd, and then that was the low. And then all week, all we did was counter back up. That was the suckers trade. And then they knew what they were going to do. As they're going up and sucking people in, they're distributing their shares as we go up. And then we break down. Now, see, the public, they can't play. They're watching football. The markets are closed. They don't have any tools at their fingertips. And they're going to get where we are in the morning. I would expect it to maybe pause here, but I do think probably tomorrow, kids, we're probably going to come down into here, which is 58.24. I wouldn't be surprised that we're opening there in the morning. And then what you're going to have is you're going to have the same people. They're going to be thinking, well, last week we bought it and rallied it up. And they might get a little bit of a bounce, but I'm inclined to think that we can pinch this down. Let's see if I can here. We can get an idea of where this is ultimately going and see these swings are in play. So this is going to, and there's the all-time peak. And so we start taking these out. Now we're going down into here, down here, 55.28. We're going, now we could be going, stepping down 53. So um, it, I thought from a timing standpoint that maybe this was going to be March, but now, I'm beginning to think that we're making the move now. And maybe in March we get some sort of significant bounce, but we could be down if this is it, we could be down 10, 20, 30% very, very quickly, very quickly. But this is what we're going to be looking at. Now, where did we get our options on? Um, we got them, up. We get our options on up at resistance. We don't short in the hole. When it comes to options, we're counter traders. Counter traders. That means we're getting them up at the highs. If you are putting on options on support or in the hole, and you're also putting them on in the morning, um, and you're putting options on based on charts alone, then you're gonna have a hard way to go. This is a tool here I can show you. This is a cool tool. We got the Zoom writing, so you're kind of blocking a little, but this is the SMC options defined risk club selector. And so this tool will give us option opportunities or our members every day, every day real time. But you can see there was just a ton. And anybody who put these on, see, we were busy Friday afternoon, we were busy Thursday afternoon. Um, I was talking to a gentleman, he was from Canada, and I had, I wish I had more time. I just don't have the time to be able to. If you're a monthly member, I'll give you a hall pass and we'll give you a 1 hour tour in the morning, then you can hang out all day. I happened to spend an hour and a half with him, and it got to be 3:30 in the afternoon. I said, I'm up against it. He goes, what does that mean? I'm like, I gotta go. I got work to do. Because see, we put our options on in the afternoon in that last half hour, you know. Um, and this is an example of where we get them. So any of our members that were putting these options on, um, Friday afternoon, they're going to be in really, really nice shape tomorrow, this week. Going to be beautiful. If you want us to, I'll just say this too, if you have a market, a stock, and you want us to plug it into Swing Machine right now, on a daily interval, an hourly interval. We'll look at any, I'm happy to do it. But again, this isn't the only tool that we have, right? We have a whole host of other tools that we use. And if you weren't here last week's big narrative was that China had some little upstart company that was going to, develop AI for a fraction of the cost and blah, blah, blah. Tonight, it's probably the tariffs, against Mexico and Canada. Um, Now I love Canada and I love the people in Canada and Mexico too, although I'm not crazy about going to Mexico. Just not. But but I do love Canada. Love to go. If you haven't been, you really need to, especially British Columbia. The exchange rate right now, the loonie is in awful straits. It's underneath 70 cents, so it's at a lows that it hasn't been at for some time. It's around 69, 68 cents. So if you're here in the States and you've never been to Canada, you want to go and help stimulate their economy. And you also get probably some really you'll get a lot of yardage out of your out of the greenback. Scott is saying every time I zig, the market's at, oh, okay. It's so hard to follow the institutional money on a daily basis on equities. Everything trades on levels. It's quite eye-opening when you figure the part of charts. Um, it's Canada's very clean, very beautiful. Vancouver, the islands. Yeah, I've never been to Toronto or Ontario, but just gorgeous, I'm sure. Yeah, yeah. Um, but hard to follow the institutional money on a daily basis on equities. Honestly, I don't even know what that means, right? I know it sounds kind of good, but I, um, institutional money, retail money, money's money. We do it all day, every day on futures, on equities. Let me show you something. Um, if you don't, let me show you. Let's go look at equities through Swing Machine. So I'll show you. All right, so here's the NASDAQ 100. Okay, this is let me get this positioned up in here. So this is Swing Machine Plus, and we have the NASDAQ 100, 100 stocks, and it's all set on a daily basis. Okay, so here is Moderna. Moderna. This is our top stock here. It went short 150 days ago. It went short at 121 on June 27th, and this gives you a lot of trend information. Now, if you had put in $10,000 short, you made 6,700 or 67%. If some broker from Edward Jones had put you into Moderna and you said, "Hey, buddy, I'm going to sell at 121," you would have saved yourself a 67% haircut. So retail money, institutional money in Moderna, I don't know. I don't care. Our machines just track the price. But you might be looking at this saying, well, wait a minute. I want to know, Don, real time, and I'm going to scroll down and show you real time, how many stocks out of the 100? Now, we're long and short, right? So this one happens to be short, but we're also long something called Dash. I don't even know what that is. DoorDash. 125 days ago, you'd be up almost 60% on DoorDash. So let's scroll down. And out of 100 stocks, watch what I'm going to show you. All right. So right here, 81 stocks, including Apple, were profitable. Barely, but profitable. That's not so bad in a tough market, maybe. Now, the rest of them, the other 20%, we are down, and our worst performer is this one down 6%. We can't see it because of my writing. Now, that's on a daily basis. Maybe you want to trade stocks or you want to trade options on every few days. So I probably wouldn't use a daily. I would probably change them all to an hour. Let's see if I can do this here. I can't see it. Let's see. See if I can get this up here. Can I do this? I'm going to pinch this down so I can see it. I'll put it back. Customize all symbols. There we go. Sneak it in there. And then I put it on a minute. I'm going to change them all to 60 a minute. Real time. Okay. So same thing. Let's sort. Okay. Starbucks. If you bought Starbucks 93 hours ago, you're up 15%. Could you have made some money with an option on that? I think so. How many stocks on an hourly basis and how about this one? Micron Graphics, 42 hours ago. You could have got a put on, you got a 12% reduction in price. Would you have made some money on that put? Yeah, probably. Yeah. All right, so let's scroll down. Out of 100 stocks, how many are we profitable in? Real-time view. Bear with me. They're profitable, but barely. They're small. Right there. 76. 76%. The yellow ones were flat. How many yellow ones we got? Two. So out of 100 stocks, 78 were either up, long and short, but we're up, we're profitable, with the exception of two that were flat. Now these others, yep, we're losing. And what's the worst one? This, and I would never short Walgreens here, right? I mean, I wouldn't short Walgreens here. I wouldn't short it at all because they were mentioned to be in a buyout. So I don't know. I don't even understand what it means to say that there's institutional money that is clouding my judgment and therefore I can't do it. It just doesn't hold water with me. Now, it sounds good, right? Sounds good. It may comfort you, but that doesn't comfort me. And it didn't comfort me. Of course, there's institutional money at play in here. You have a huge advantage over the institutions. They can't be trading their portfolio every hour. You can. You have a huge advantage over them. So I'm not beating anybody up, but again, got to be careful, you know, who you're listening to and what you're choosing to believe in and not believe in and or, um, as an example. So we're going to slide back and go to our intraday. I think when we trade a shorter term, we are more exposed to the market. Um, why would you say that? That's not a beer, by the way. I don't drink. I'm opening a Waterloo sparkling water. Why would you think a shorter term you have more exposure? Why would you think that? You actually have, in my estimation, my view, it's just the opposite. It's just the opposite. If you are in the market all the time, all the time, your money's exposed 24/7. And I don't know what that means. A roller coaster ride? I don't, what, a roller coaster for you? Maybe? What is that? I don't even know what that means. Sounds like fun, but you mean the market goes up and the market goes down, the market goes down, the market goes up? Okay. What are you going to do about it? So, again, what are you going to do? Yeah, up and down. Yeah, market goes up, market goes down. What are you going to do about it? You think it always goes up? Do you think it always goes down? Do you think that if you buy the market today, that in 10 years from now, the market will be higher? Hmm, maybe. And again, just go to your charts. Somebody in Naples fan in 1966 bought the S&P in 1966. And he said, honey, I'm just going to put my money in the market because the market always goes up, but not 10 times in one day. Well, all right. So, um, and just to finish the point, so that person bought the market in 1966 and the S&P, the entire S&P in 1981, 16 years, finished exactly where it started. The only people who made money, the only people who made money were the traders. So let's go back. Let's go back and let's just explore this a little intellectually um, with Naples fan. And it's okay. I mean, I'm totally okay with this because, this way people, and I'm not telling you that you should do or should, or anybody should or shouldn't do anything. But, um, but if you think that the market only goes up, one of the questions that I used to ask Susan back in the 2000s was, Susan, if we're only supposed to buy, who's doing the selling tonight? Who's going to be doing the selling tomorrow? If you can't time the market, then who's selling it? Now, when I um let's see here, let me let's just kind of draw this out a little bit. This way I think about it anyways. Um if you have a market, first thing is time. Time in the market is a risk factor. It definitely is a risk factor. And how do we know that? How do we know that? Well, if you buy a put tomorrow for Friday, it's going to cost you so much money, depending upon what it is. So if you buy a SPY put tomorrow for Friday, it's going to cost you so much. If you buy the exact same SPY put, same strike, but you go out 6 months, it's going to do what? It's going to cost you a whole lot more, right? Because you're buying a hell of a lot more time and there's a lot more exposure, a lot more exposure. Um, I always get a kick out of the folks that show up on CNBC. And they'll show up tomorrow, maybe in a few more days after the market's down like 10% or something. And they'll say, well, you can't time, especially Tom Lee with the black glasses, you can't time the market. And it's too late to tell now. But, in any case, what I'm predicting, that the S&P, if you just buy and hold on to it, the S&P is going to, this is a buying opportunity. You buy the dip. And these people they gotta be the most. I'm hope I'm not. I kind of am hoping I annoy you because I find them so annoying with their black glasses and their nasally voice. And the S&P, Joe Bag of Donuts, Joe Kernan, it's probably going to be at 7,500, Joe, because we got this going on and we got that going on. And if you ever look at the Chiron down below, the guys work for like a different bank every week, and they just trudge them out there. Before him, it was Gartman. But then he'll say something, and they especially like to trot them out like in January at the beginning of the year or at the end of the year. That's where we're going to be at the end of the year. But just before he leaves, he'll say something like, "But of course, Joe, I mean, I'm not timing the markets. I'm an investor, Joe, and I'm not telling you where the market's going to be like tomorrow because nobody can do that, Joe. I mean, but at the end of the year." So he can't tell you where the market's going to be tomorrow, but yet he can tell you where the market's going to be a year from now, or 5 years from now, or 10 years from now. That one's easy. Sure. So you want to follow that, you go right ahead. Okay. You go right ahead. Crypto is going to 1 million. This one's going to 10 million. Heard it, done it, I've already, you know, I know what that all is. So you can believe what you want to believe. Now, the question is this. When Bagger was walking to school, this is going to be like one of those. I lived in Boston. And when I lived in school or when I lived at home and a little bagger where I lived, a little thing there, a little walker, that was me. And I had to go to my junior high. And son of a bitch was like about 3 miles from my house. And I didn't want to take a bus. And I would take, because it was cold, cold as hell up there. And I had to go across this big ass ball field. It was like a 3 mile. I wanted to take the most direct route there. I wanted to go there just as, I just wanted the most direct route. I did not want to zig and zag, right? I didn't. I wanted the most direct route. And this is where, folks, you have to decide what you want to do and what appeals to you. If you want to make, you know, this some sort of destination that you're going to get to, and you want to put your money into a mutual fund or into something or in one of these ETFs, and you want to listen to somebody say, for the last 150 years, the stock market has gone up 10% a year. And so the year 2050, you're going to have so much money and it's going to be worth, $1 million. Of course, eggs, are going to cost you $10. And, so your million isn't going to buy you anything. But, you can do that. There's nothing wrong with doing that, right? Um, but you got to remember, you're giving your money and you're seeing the money, and I'm appealing to your intellect a little bit. When you see the money being bought and sold, who do you think is doing that? And why are they doing that? Because the guy here, he might put $1,000 on something here. He might. He might. And he might, when he gets to here, he might have a 10 bagger, 10K, buy and hold. And he's in all the time. But there might be another guy and he says, you know something, I'm going to, and we don't know if it's going to go there, by the way, right? We don't know. But this guy says, I'm going to go up and I'm going to come down and I'm going to go up and I'm going to come down and I'm going to go up and I'm going to come down. And you know what? I'm going to I'm going to show you this in a minute because you're going to say, you can't do that. Oh, yes, you can. But you could buy right here and and sell up here and make so much. And you could sell right here. Oops, I want a red one. Sell here, close it here, and make so much. And just repeat that. And maybe instead of using 1,000, maybe you use some leverage. This is the thing. The person may use $1,000, but he may be using options or leverage, which represents $10,000 in notional value. And every time he does this, he's making 5 grand, 5 grand, 5 grand, 5 grand, 5 grand, 5 grand. How do you think, how do you think those hedge funds and those traders up in New York and Chicago got to build those big buildings? Do you think that they're buying and holding tonight? Do you think that's what they're doing? Because if you do, I wish you the best. But you might be saying, and this is the other thing, is there are patterns, and the machine can recognize patterns. The markets go sideways 70% of the time. The other 30%, they're either going straight up or straight down. But 70% of the time, they go sideways. Now, that could be intraday, that could be weekly, that could be monthly. Now, when you think about this, how what you might want to do, now it depends, on what you're trading, if you're using any leverage, and if you have any expertise at all. It does take some time. There's a skill set to doing this. I mean, this isn't, um, but I'm going to clear this out. And now, when you're trading, I'm not some wild-eyed intraday, trade, trade, trade. I mean, I got machinery that can do that. Um, I don't ordinarily do it, but I haven't had that many trades here. Um, let's come back here. This account started last Sunday, last Sunday at $30,000. Right, so that's 2 weeks. Now we're above, well above my weekly goal, but I'm trading. I'm not committed. And I mean, if we turn around and we start buying like crazy here in the next hour or next 2 hours, I mean, I don't know what the market's going to do in the next 2 hours. I don't know what the market's going to do tomorrow. But if it starts to go up, I can close the trade, capture the profit, and if I want to go long, I can, or I can wait just for the next bus for it to come back. But what I want to show you is this. Okay, so I just drew something out. Watch this with me, Naples fan. I hope you're there. Do you see these little green dots? These green dots are what we call C points. They're proprietary to us, and the red ones. Each one of these little bricks has a value of $1,000. It's the ES futures contract. Each brick is 1,000. Now, these dots that you see, and by the way, this is, let's get a date on this. That date is August 6th. All right. So how many months is that? Oh, somebody figure out the months, 5 or 6 months, 5 months. All right. So I'm going to take a cursor and I'm going to put a yellow line. Now, this first one here, it doesn't show up until the start of this brick right here, right here, right where my cursor is. So stay with me. So that dot wouldn't have shown up until that brick opened. And what I'm asking you and everyone is, could I have made, or could you have come in right here and bought and then closed for one brick? Yes. If you had, you would have made $1,000. Let's put it up here. 1,000. So now let's go through. Could you have done it right here? Could you have done it right here? Could you have done it right here? Now, this one is going down. This one doesn't show up. This red dot doesn't show up until right here. Could you have made another 1,000? Yep. Could you have made another one? Yep. Could you have made another one? I'm slowing myself down. Could you have made one here? We'll come back and count them. How's that? I won't take the time to scratch them out here. Here, 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 here. Again, 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 again. This one here, 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 here. Are you kidding me? No, I'm not. and here and here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. 30 trades in a row. Now, over 5 months, and it's 30 grand if you use one futures contract. Now, did I have more? Now, I probably time in the market. I was probably in the market for probably less than 10%, very little time. You see, what you don't know is, we have a gentleman, Chris, in Jacksonville. He's been a member with us for a long time. With Chris, it's not only a game of making money, it's not only a game of his profit factor, it's also a game of being in the market as little as possible because he can't get hit. But, I don't know. You could say, well, you know what? I bought over here and I sold up here. And you know what? That's okay. Well, that's great. You may have a whole bunch of profits. You might. But if you don't have any discipline in the next 3 weeks, you might be right back down. But the guy, or the person, the guy or gal who's doing this, now this could be really frustrating because you could be leaving a whole lot of trades, leaving a lot of money on the table. But when our members are trading really well, they are leaving money on the table, a lot of money on the table, but they're accustomed to doing that. But this would be like golfing with a 9 iron. You can do it. It's going to take you a little bit longer. But you don't want to be tethered by the machine. I can't be sitting here waiting for this. So I got to know how to program the machine, and we show you how to do that so that those alerts get sent to your phone. Not from me, but you set them up yourself and you know how to do it. Now, this is just the ES. What if you did it on the NQ? Gold, copper. What if you did it on 5 to 7 markets and you made 20 or 30 grand in each over the last 6 months? Oh, that'd be nice. Oh, you tell me who has more risk. Uh, so risk is important. I mean, it's a big time in the market. So you gotta be careful, but you think it through. And the same thing when you're trading, we can set the program or programs to trade so many times a day. And I think it's fair, if you say, well, geez, I don't want to be trading 10 times a day. No, I'd rather not either, actually. And now if the machine is doing it and the machine is doing it, I don't really care. He could trade 100 times in a day if the machine's doing it. But um, But we can also ask the machine, if we have a program, we can ask the machine, tell me over the last several weeks how many times on a particular strategy should I do this? Think of a strategy like a football play, quarterback sneak, quarterback sneak, quarterback sneak, quarterback sneak. Tell me over the last, 5 or 6 months of playing, or the last 5 or 6 years, how many quarterback sneaks can I run during a given trading day and get away with it? And the machine will come back and say like 3 times. Okay, and we'll do 3 of them. You can do that. You can do that. You can use market history if you know how to work with the machinery and you know how to go. The folks that are here too, much more important than this is, and I'm going to share this because I think we might have some new people, but does everybody here know what a, let me ask them this way. How do you keep score? I was going to say only fan. It's Naples fan. Could be an only fan. Don't, don't, don't shock me. I was going to say only fan, Naples fan. I don't know. Is that Naples in Florida? Naples is beautiful. I'm going to erase these. But if you got any questions, anybody wants to come back at this, and I'm just trying to stimulate your ideas, your maybe some assumptions too, challenging some. Not trying to change your view. I'm not trying to change your values. I'm not trying to um, profit factor. Yeah. All right. So you use a spreadsheet. What do you put on the spreadsheet, Naples fan? So I'm asking a very simple question that's critical to understand. So I'm gonna, if you'll indulge me, I'm gonna wait because we're on a little bit of a delay. And so I'm going to converse with Naples fan if he's willing to converse with me, and I'm going to make it worth your while. I think I am. I hope so. But what what do you put on that spreadsheet, and how do you keep score? Again, we're on delay. All right. Well, I'll tell you what. I'm just going to jump ahead and let me just share. Naples fan, you might already be doing this, and maybe the others are not. But what I want to share with everybody is this. Um, we have two traders. We have Naples fan, and he trades in his first week. He trades and he gross has a gross profit of, this is Naples fan. I'm going to use some names here. Naples fan. And he has a gross profit of 10,000 bucks. He had a great week. 10, not 1,000, 10K. 10K. That's his gross profit. His gross loss, put it over here. His gross loss was 5K. And we'll make that red. I should have made the other one green, but we'll make it red. And so his net, we'll make this green, is 5K net. That makes sense? Over here, we got Keiko. Keiko has a gross profit, I'll leave it green, a gross profit of $1,000. He has a gross loss of 200. And I'll make that red. I can do that. I'll make that red. And he therefore has a net of $800 net. Naples fan, without looking at your spreadsheet, who traded better, you or Keiko? I'll wait. Alex says Keiko, but I'm going to wait on Naples fan. He's got the spreadsheet. This is so critically important because um, if you don't know how to keep score, or you're keeping score the wrong way, then you may not really understand what the game is. And more importantly, you don't understand how to improve, or you don't understand what to work on. Keiko wins 20%. Um, no, we don't. I don't know how you get 20% off. Keiko wins 20%. I had 50% loss. Um, you're kinda getting at it, but that's a little convoluted. Um, but you kinda at it. What you do, but thanks. And let me just share with you. So the word just come here. So what you do is you simply divide gross profit by gross loss. You divide the two. And that is going to give you something called profit factor. And we'll put this in in blue. Profit factor. Profit factor. Naples fans' profit factor is $10,000 divided by 5,000, the loss. He's got a profit factor of 2. Over here, Keiko, and everyone's right, profit factor of 5. 1,000 divided by 200. What is profit factor? Profit factor tells us how much money we're making for every dollar we lose. So when you have a profit factor below 1, you're a losing money machine. You're just not making any money. You may have some winning trades, but you're just not making any money. If you have a profit factor of 2, 1 to 2, we consider that average. You're in Naples, Florida in the summertime and you're putting shingles on a roof. Hard way to go. If you have a profit factor of 2 to 3, we consider that kind of above average. That's good. And if you have a profit factor of over 3, we consider that a money-making machine. Now we can have members, and that profit factor will vary from day to day, week to week. We certainly have had members have profit factors of 90 and higher in a week. And now that you understand what that means is if they made $90 for every dollar they expended, if they lost $100, they made 9,000. If they lost 1,000, they made 90,000. Over here, though, Keiko, he only made 800, but he had a profit factor of 5. His trading skill was actually 2.5 times better than Naples fans in this example. He's making $5 for every dollar expended. The money will take care of itself. The money might be just a reflection of what the market is doing. But the profit factor is a reflection of what you're doing. And most people have no idea what it is. They have no idea what their profit factor is from day to day, week to week, or from year to year. And if you don't know what it is, you have really no idea what you're doing. Sorry, but you don't. And you don't know what to work on. And you don't know what's working. You might think of it, it's kind of like a golf handicap, but it's a little bit more than that. A golfer needs to keep track of, sand saves, greens and regulations, number of putts, so he knows what to work on. Now, when I am trading with a machine, I don't really care too much what the profit factor is because it's a machine. If it's 1.2, 1.3, 1.5, no problem. I mean, I'm okay with it. If I was having to, what I mean by this is if I was having to put the trade in, decide where it goes in, decide where it comes out, manage that trade day in and day out, and I had a profit factor, at the end of the day of 1.3, 1.4, I'd be exhausted. I'd be, what a grind of a day, shingles on the roof. It was a grind. But if the machine is doing it and I'm sitting back, listening to some music, reading a book, talking to you guys, and it's doing, I don't really care. It's a machine as long as it makes me money. But that raises another issue, and we draw a distinction between discretionary trading, machine trading, robot assisted trading, and robot assisted hedging. But this is critically important to understand, and it's really important going forward, whatever it is you're doing, including trading options, because everyone else is keeping track of, um, um, you know, the percentage, right? The percentage return. That doesn't tell me anything. That guy who shows up in the first tee and he says to you, you just, you pull up and he's like, you know what? If you play your cards right, I got this boutique broker that I can, if I really get to know you well here, I'll put you in touch with him. He gets me 10% a year, every year. He gets me 10%. Okay, really good. But what you don't know is what, um, on what? 10% on 100,000, 10% on 100 million, 10% on on what? Getting a 10% return, it just, on what? So it doesn't tell you anything. And then you get the guy up in Connecticut who I'm not going to name, and he has all kinds of things you can subscribe to, and he promotes a win-loss ratio of like, 0.87. I'm sorry, 87%. Holy smokes. He's got a win-loss ratio. If you subscribe to him, he's going to cut you in on some alerts and you're going to get a win-loss ratio of 87%. Martha, that's got a guarantee, got to make you money. You don't have to learn a thing. You don't have to do nothing. It's all you're just going to get them, and you're just going to be making money. And not so fast. There's a trick to that. There's a trick to that. There's a couple of things about that though. But the big trick is this. You can have 9 wins in a row. Wow, what a service. I just got 9 wins in a row. 1,000, 1,000, 1,000, 1,000. And then that 10th trade, you lose 20 grand. You eat like a bird and shit like an elephant. Now I'm going to take you back. I'm going to take you back to that chart in a moment. I'm going to clear this and take you back because no one asked me the question about that earlier example, and I want to show it to you. The percent return doesn't tell me anything. The win-loss ratio doesn't tell me anything. In fact, if you widen your stops, you can get a win-loss ratio up to like 95%. What's the other one? And then you get the guy who shows up on the first tee. He says, "Oh man, the percentage return. I made, $30,000 on that option." But you're gonna be polite. You're a gentleman. I am too. I'm like, okay, that's great, great, glad to hear it. But you're thinking to yourself, yeah, he made 30 grand, but how much did he lose? How many times? How many options on Tesla did he lose? He don't tell you that. But I asked that guy up in Connecticut because he did that, right? He sent me an email and I wrote back to him on Twitter. I said, can you tell me what the profit factor is? Because he was promoting a service and he was making claims about, percentage returns and he was making claims. We don't make any claims. I don't. But he was, and I wanted to know what his profit factor was, and he blocked me. You know, it we don't make I don't make any promises that you're going to make money. I don't make any suggestions that you should do this. I'm not making any claims whatsoever. I am offering you our perspective. I am offering you our tools, and it's going to be up to you. You are going to set your own alerts. You are going to control what you can control. And there's a lot of things you can't control, and we're going to make you aware of what those things are. We can't do that tonight in a 1 hour video, but we do throughout the Q school. But there's something that you didn't ask, and I want to go back to this. And so let me just clear all this writing here. So if anybody's got any question about profit factor, but it's critically important. So if you don't know what your profit factor was last week, you might want to calculate it last month, last year, last 5 years, because it's going to tell you whether or not you're going anyplace. And if you do, great, keep doing it. Now, this one, remember this guy over here? Let's go back to this one. Nobody asked. I counted up all the winning trades. You must, when you enter this, you're trying to make one brick. You're risking 2.1 bricks, 2.1 bricks on every single trade. And there will be ultimately a loser or two in here. And your loss will be 2,100 bucks. Now, by the way, if this, you can't, um, setting the size of the bricks is critically important. But by the way, this is a mini. So if you want to trade a micro, you can trade micros. But this is also very, very slow. This is meant to mimic what would in essence or be comparable to a daily time frame. Notice now we're blowing right through this. So we're going to be down in here tomorrow, kids. And that's going to be 50. Don't go taking this trade, right? Because, you can bounce up tonight, if you're using leverage, but 58.25 probably going to get taken out. Does that make sense? So, um, Naples fan, thanks for playing along. Um, and but time in the market is definitely a risk factor. And if think of it this way too, when you go into why this is not a game of chance, when you go into a casino, you got to play by their rules. You got to play by their leverage. If you could sit down at a roulette table and stop the marble and stop it, would that be an advantage? If you could play a game of golf with your friends and as soon as you get up, you could stop and take the money, is that an advantage? On anything. If you can quit early, is it an advantage? I mean, I could quit right now, right? I could. I have other tools at my fingertips, but if I, just stop right now, and this is the thing that we say to all of our members, one of the biggest challenges they're going to have is they're going to need to find to do something else because I'm going to maintain Chris's privacy, but Chris in Jacksonville can't hit his goal is not just to make money, but to do it in as short a period of time as possible because he's got other things that he wants to do. And you should. Now I'm here because I love it and this is what I do. But you may have some other things, you may have some other responsibilities, you may have some other things you want to do. I don't have to be here. I think if you sit down, now there are going to be millions of people that are going to be, coming into their office and they're going to open up their computers at 9:30 in the morning or 8 o'clock, and they're going to be there till 4 o'clock trying to, day trade stocks. And day trading stocks is not really productive because they're not all that liquid, and it takes quite a bit of capital, and it's not tax friendly, and there's a whole bunch of other reasons. You can trade options around them, but any case. I hope that's helpful. It's 10 o'clock. I got to get back to work. I do want to thank you for everyone coming by. I'm going to let you watch this action. It's pretty cool, and invite you to visit the website. If you're getting it done with whatever it is you're doing, I am the first person to say, just keep doing it. Keep it to yourself and just keep doing it. You don't have to keep it to yourself. You can tell anybody you want, but keep doing it. Um, if you aren't getting it done, stop. Think about what you're doing. Think about what you're up to. You know, now Naples fans say, okay, he's saying now he thinks it is an advantage to shorter time in the market. Yeah, yeah, it is. Less chance of getting hit, less exposure. Of course, they want you in, right? The asset gatherers want you in. They just want you to send them their money and then they want you to go take a nap or go to work, just go to work and make some more, send them some more. They don't want you doing this. This is what they do. And you're getting a good glimpse of it. Um, so, by the way, if you go to the YouTube, we have entered into some of the CME challenges. We didn't do that great on the last one, but they've only done it 3 or 4 times now. And we had the first one, there were 1,400 contestants. It was a week-long challenge. They only gave prizes to the top three, so you got to really, really, not trade a lot, but you got to use their maximum leverage. You're welcome, and you got to use their website. And I can't automate. We out of 1,400 on Thursday, we were number 10. We got very close to the top few. We didn't quite get there, and then when it was all said and done, we finished 20. The next time there were 2,400, we were inside 10. I think we were 10 or 11 on the last day. On Friday morning at 5, I was number 2. I got tired. Sorry, head's asleep. I went overnight. And when it was all said and done, we finished number 7. And you can see it on the website. That's documented. Um, well, yeah. Well, that profit factor is the most important thing that you can do. I mean, it just is. It's just when you stop and think about it, it's just like running any other business. If you got a medical supply business, you got to turn that inventory, and you've got to know you need there's other metrics, but the profit factors, for even running a business, but the profit factor in trading just tells you how much you're making to how much you're expending, and you can throw it. And now and we are asked this all the time, like sometimes we'll have traders that they'll have 5 trades in a day and they don't have any losers. How do they calculate their profit factor? Just put the commissions in. Just put the commissions are usually negligible, but just put them in, and then you'll have an extreme profit factor. It will fluctuate. It will fluctuate, but on a weekly basis, you're going to know kind of where you are. And it's crazy because the money, and I use that example during periods of, and this is what I find, and I got to leave you with this, is that during periods of normal volatility or low volatility, the market gets really stingy. So we could have a decent profit factor, but we don't make much money. $1,000, couple $1,000. You just don't make a lot. Um, but when we get extreme volatility, then we do really well. It's a lot easier. So people will say that don't know any better, the market doesn't like volatility. That's ridiculous. We love the volatility. We thrive on the volatility. We thrive on the uncertainty. It's great. We love it. It's the opposite that we don't like. Remember too, trading futures, there are micros. You could be 1/10 the size. So instead of being up 16 grand, if you did this with a micro, you'd be up 1,600. I mean, the percentage return is ridiculous though. How much money did you need to put on a micro to take overnight to tonight? 2,400 bucks, and you'd be up 1,700. What's the percentage return on that? That's leverage. That's crazy. That's really great. Um, Now there are 24 trading days in a month. Rarely do we trade on Fridays. This Friday we did. It turned out, to get this trade on, but rarely we do. But let's say you take one day off and you don't trade on Sunday nights. You guys are here on Sundays. This is you guys are passionate about this. Otherwise you wouldn't be here. You'd be watching football. Um, 20 trading days, $100 a day is 2,000 a month. 200 is 4,000. 500 a day is 10,000 a month. Every what we teach is we want zero likelihood of a negative outlier. That doesn't mean we're not going to lose. We will, but negative outliers, no, zero. We use machinery to make sure that doesn't happen. You would actually have to override it. You would have to override the governor and drive the car, 150 miles an hour. Not a good idea. And we teach against that. But we do want you to have positive outliers, which is what we're having right now. The average winning trade on the NQ, the 5 minute, the average winning trade is $2,000. This one's up 16,000 and we're letting it run. That is a hugely a positive outlier. And I want that. I want that in my account. Am I going to get that every day, every week? No. Nope. And then in a few more days, the volatility will come in and I'll be back to normal. And we just make our normal trades and our normal, profit factors. I hope it helps. Naples fan, again, thanks for playing along. Give it some thought. Visit the website. Think about what you're doing. Stop, listen. Um, and like I say, if you're not getting it done, I would just stop and I would think it, I'm not saying that you have to come to us, not at all. But there isn't anyone that I see online, there isn't anyone that I see that is approaching the markets the way that we do at all. Not at all. Nope. They don't have the tools. They don't have the discipline. They don't have the approach. They just don't. They are doing what everyone is doing tonight. Oh, the market's on off because of, this and, we're gonna, you know, get calls on Tesla in the morning and, yada, yada, yada. That's not us. Enjoy, everybody. Thanks. Any questions, let us know. We're going to let you watch. I'm not going to share it on YouTube. I'm not, but during Q school on the very first day, I do share, and I have a very specific trading plan. Now you're only seeing the NQ here, right? We trade multiple markets and we also trade options and we have multiple, machines doing different things. But we keep this view on the NQ primarily, and I probably should highlight it because there's such interest in the NASDAQ. So, but let me just frame this here. I'll put this in. So this is the trade right now that oops. It's not what I want. I want the bracket. Um, nope, still wrong, Don. Okay, here it is. This one right here. So that was at 125. And there were folks watching us on Friday afternoon. And we knew then that the likelihood was we were going to carry it in. But we do have a weekly plan. And last week was an outlier, a positive outlier. And right now, this week is once again a positive outlier. Beautiful, beautiful. And we're going to move to protect it. And guess what, Naples fan? We might be done. Our trading, we might be done at 10 or 11 o'clock tomorrow. That'll be it. And then I got to go find something else to do all week. Kidding. I have other things. I have other markets, but you get the idea. And but we will encourage you to have a plan, and you can adopt the plan that we use and adjust the leverage to fit you. Because we have folks that are doing much more. So they different position in life. So if a person had taken 10 minis on Friday, they're up 160,000. If they took 10 of these, they're up 90,000. If they took one micro, they're up 900, they're up 1,600. We're trading one, just one mini on the NQ. Now, the Bitcoin mini is huge, right? It's huge leverage because it's 100,000 and it is huge. And this Bitcoin futures contract represents 5 coins. Now you can trade micros on these. I leave them up because people like to know what the signal is doing on these, but I don't trade the even the futures contracts on crypto. I just don't. And I certainly don't trade the coins on those exchanges. I don't. I don't need to. I don't. Just 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 a distraction. Another thing that you can do that you may not know within futures is you can be both long and short at the same time in the same market. Hmm. Can't do that with stock. But why would you do that? Well, again, we come back to I think we got an empty chart over here, don't we? Or an empty space? Think of it this way. You do it with options all the time. So again, I'm going to just give you something to think about. Oops, not that. Sorry. Think of this like a teeter-totter when you were a kid and you got something going across, right? We're perfectly in balance, perfectly in balance. You might think of this as delta. So if we're perfectly in balance, we're delta neutral. We're not making any money. The plane is just flying, you know, nice and smooth. Think about this in your account. So let's say that you go long here. Okay. So what you want to have happen, what you want to have happen is you want it to just go to the moon. That's what most retail traders do. They just buy something and they want it to go straight to the moon. They get something like that, right? Go straight up. But sometimes they buy it and it goes straight down. Ooh, that wouldn't be so good, right? And their volatility in their account becomes real volatile. We hear this all the time. Folks will call us and they'll say, Don, I was doing really, really good. I made like $30,000 in 3 months. Then I gave it all back. And then I made it again. Then I gave it all back and then some. Then I made it. Then I gave it all back. That's volatility in your account. That's not good, right? So you need to learn to trade and to hold ground, trade and hold ground, trade and hold ground. So one of the ways that this can be achieved is what if we put on a long over here and over here we put on a short on the exact same market. Now, if it's the exact same market, the NASDAQ long, and it's short over here, and it's the exact same strategy with exactly the same leverage, then guess what? Your account's going to be perfectly neutral. You're just not going to make any money, but you're not going to have any volatility in your account, right? It's just going to, because if this one goes up, this one, will be losing money and vice versa, right? It's their opposite positions. And you might say, well, Don, how can I even hold? How can I hold two? How can I hold uh, um, a mini in the how can I be long and short at the same time? Well, there's a couple of different things to consider, but one of the things might be you might go long, you might have a bias to the long side and go long one mini contract in the NQ. Over here, you could, if you wanted it to be perfectly in balance, you could put on 10 micro contracts, 10 micro contracts. And you could be short and you'd be perfectly imbalanced, but you wouldn't make any money. So now you can think, well, all right, well, what might I do? Well, one of the things you might do is you might run a strategy over here. As an example, you might run this one on a 5-minute basis. And this one, we might run this one just on a 2-minute. And on this one, we're going to use one mini. And on this one, we're going to use just 5 micros, half the leverage as an example. And we might run the exact same strategy. So what'll happen is when this goes long, we want it to be up nice and fat like that one is over there. We want it to be nice and fat. But then suddenly, the market gets a little bit overdone. People, the buyers start to come in. They put on trailing stops. The institutionals got trailing stops too. They got machines, right? This is all machined, folks. It's been machined for decades, like in the 70s and 80s, for decades. It just is. I mean, and this is the era of AI, for God's sakes, So, you know, but say on a 2 minute we start to pull back. Well, I want to stay in this position, but if the pricing action is starting to pull back, maybe this isn't going up as fast, or it starts, this number here is starting to go down. This one actually might go short, and then I start to make money here. So what this does is it smooths out your was meant to, right? You have to learn how to do this, right? Um, it's meant to smooth out your account, not red, we'll go with a green line, your account equity. So rather than your account equity oscillating like this is no good. Woo, flying around. We want your account equity to kind of go up, maybe a pullback, kind of go up, kind of pull back, something like that. Maybe that's on a given day or on a given trade. You kind of smooth it out. And we use machinery to do it. Mhm. And suddenly, you start to like, oh, geez, maybe I'm just pouring a bunch of money into, Dogecoin and hoping it goes up. And so I can get into a chat room on Reddit with a bunch of yahoos and start, hooting and hollering about Dogecoin or Doggy Coin. You know, that's not new either, kids. I just want you to know back in the 90s, it was the Yahoo message boards where AOL had an instant messenger. It's all nonsense. It's just a big waste of time and attention, you know. Another way of thinking of this is, it's an airplane analogy, but there was a flight in United Airlines way back, decades ago or 20 years ago in Chicago, and one of the engines blew and it cut the hydraulics, and they couldn't steer the plane, and they wanted to get out of Chicago. And they wanted to get to Sioux City and try to put the thing down in a cornfield or at a bigger airport, try to save the 300 souls on board. And what the pilots found out they could do to steer the plane is they would throttle one engine faster than the other. And now it was causing the plane to, horrible loop down and up and down and up. But as they did that, they were able to steer the plane a little bit, get it out of Chicago and head out to and you can even see the videos on it. And the plane did crash, and a lot of people got killed, but a lot of people lived too. But so when you are buying call options, you're just long. When you're buying a put option, you're just short. But when sell a call, you're short, and then you also may buy a call, and you hedge it. You hedge your bet. Or if you want to get long, you can sell a put and then buy a put, and you're hedging. You're both long and short a stock at exactly the same time, but you're doing it for principally the same thing: reduce your risk, reduce your cost, and also smooth out your volatility. Hmm? It's not something that we can. I can only show you, and the idea of these sessions when we get on and we have folks here is to show you what's possible and not be spending all your time about, talking about why gold's going up or inflation or deflation or, you know, crypto this, crypto that, or, you know, Trump this, Trump that. That's none of that's going to help you. Trust me. You know, or Federal Reserve this, Federal Reserve that. It's the markets are rigged. Again, we come full circle. They're rigged. Just stay on the side that's rigged. I mean, that's all. And the prices are coming up. We can see on the 5 minute without even looking at a chart, right? I can see that the prices are starting to come up. And those are probably trailing stops on other people's, not people, but institutions, machines starting to trip off. That means my high water mark of 18.8, the account's going to go down. But I'm not going to make a decision. I'm not trading the money. And if you're trading the money, as soon as you put on a trade, your eyes are on that money. And if that's what you're doing, you're trading greed and fear, and you will lose. They will get you. They will. They'll get you. They will absolutely get you. It's Madison Avenue and Wall Street. That's what they want you to do. They promote it that way. And if they get you trading the money, you'll lose. And we will bend over backwards to get you out of that loop. And hopefully, but after the Q school, you'll have the tools, and then you've got to continue to hone it and work with it, and keep yourself out of that. And the challenge is that, as Americans or people all over now, we gravitate to money, 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 and we make a lot of decisions on the money, 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 and that's the death knell for a trader. Um, we got young people that are trading, hundreds of millions of dollars. It's other people's money, but they're not focused on the money. They're focused, on their screens, and they're not reading this isn't moving averages. This isn't stochastics. This isn't MACDs. This is all original code. And all of our programs are original code. We do have some programs that do read candles for you. Just simply put, there's a place for some of that, but I just found it laborious having to read them, so we get the machine to read them. Any case, just food for thought. Have you guys seen Kanye? What is going on between Bezos and Kanye? I don't. You ever seen his wife at the Grammys yet? I'm not going to put it out there, but it's online. What in the world's going on with those two guys? I mean, I don't know. Something's weird about that. See, now people are starting to ask the question, and I don't know, I don't know what the headlines are attaching to this, but this business that Zelensky doesn't know where 58% of the aid money went. He might be right. They may have skimmed it. Where did it go? Trump's going to dig in on that. And then the highest ranking bureaucratic treasury official quits on Saturday because he doesn't want to go through an audit on $6 trillion of where this money's been going. Um, if they get in here, the American people are going to be fit to be tied if and right now Trump is there's no stopping this guy. I mean, he's 2 weeks in. If they find these politicians here with Swiss bank accounts, and he'll find it, they will find it, then we'll know why they wanted him dead. So what I'm going to do is my game plan here is I don't ordinarily do this, but I know that the 1 hour already tripped off. So I'm going to change the NQ to 1 hour so that I have eyes and visibility on the hour. So I hope I don't. So it's not likely. Now we have seen hourly signals last for 2 weeks, sometimes a little longer. Hourly signals last that long. But the fact that they're hourly, they generally don't change, 6, 7 hours. Usually they they stay in place, for a little bit, a few days. So that hourly time frame can be a great time frame on stocks as well to trade options. If you like to trade options, 3, 4, 5 days, 10 days. Ordinarily, we're 30, 35 to 45 days, but if you like to trade the shorter ones and do that, an hourly time frame off a swing machine is a great way to go. Yes, Germ. These are futures, the futures, and that's one mini up there that we put on Friday afternoon, and we're holding it. We're gonna manage this one mini on a 60 hour or 60 hour, 60 minute basis. Now we got good wood in this trade, and so we're intraday, intra evening. This account, started last Sunday at 30,000. We had a decent week last week, and then had a most of these moves the last 2 weeks have happened Friday afternoon to Monday morning. I think that this is the view of the ES chart, though. Let's bring it back. And this is a kind of a specialized Renko. These are all our proprietary tools. These are the swing points. This is an algorithm running up here. You might favor the short side, distribution underway. And we just broke this now. So we did this from Sunday to Monday morning. Folks got short Monday morning, and then all week got their head ripped off. Then we did this. No, yeah, I'll answer that question in a moment. And then we just rolled out. So you only trade algos? No, I won't say that. Let me um, let me show everybody one other thing here about who we are. Um, we talk about being diversified in what a person can do in the markets, and there's a lot that you can do. Um, not diversified in terms of what you're holding. Most people begin their trading environment in this box that we call discretionary trading. I did too, right? Discretionary. Can I fit it in there? I'll just say discretionary. And it's important to have really good discretionary skills, and we think we can help a lot of people do that. What happens a lot of times is we hear this frequently is somebody maybe working a job, doing a thing, and over their year, over their career, they may have put on some really good discretionary trades. Good. It's a different discipline. Then what happens is either they retire or maybe they say, "Hey, honey, I'm going to take a sabbatical and I'm going to apply my discretionary skills intraday." And they don't do so well. Discretionary trading is an art form itself. A lot of times, though, people are putting on discretionary trades based on what they see, what they hear, what they think. And when they increase their frequency to intraday or intra-week, suddenly they find out that their discretionary gain isn't as good as they thought. And then what they do is they start searching the internet for a guru. I'm not a guru. I'm not your guru. No, I'm not. But they will be searching for one, and they will find one, and they'll subscribe to them, and they'll have a service for this and a service for that, a service for this and alerts for that, and yada yada yada, and a crack research team, and he's chasing quad one, quad two, and he'll talk to you like you're an idiot about, all the economic mumbo jumbo he was taught at Yale. Some of you might know what I'm talking about. But as an example, maybe not the best example, but there are others. There's a plethora of those guys out there. And what'll happen is then the person will start trading they what their subscription is, what they're thinking, what they're seeing, what they're thinking. And then it'll either run off really well, but it'll eventually run its course and probably not do so well. What we try to do at Stock Market Caddy is if a person joins as a monthly member and they have good discretionary skill, they're going to get to see our algos every night. And between the algos and what they're doing, they're going to be making their own decisions. I don't have a crack research team. I don't need one. However, if they want to increase their frequency, we're going to try to help move them toward what we call machine trading. This box. I'll go ahead and type it in. machine. Now, machine trading is very different. Machine trading is the machine is present, and it could be on stocks, options, algo or futures, micros, minis. In these different machines and different programs are presenting opportunities, opportunities of their own choosing, of their own markets, of their own intervals. Could be tick, could be whatever. And they need to learn how to follow the machine. But they'll still be putting the machine, they'll still be taking the mouse and putting the trades in. And and we're going to do our level best during what we call the Q school to teach folks how to do this. So we're going to try to move them. We're going to try to help them with the discretionary trading, but we're going to try to move them in this direction. As soon as they get comfortable here going after a decent profit factor, and we've had folks in Q school, with profit factors 10, 15, 20, 30, 50, they can get results really, really quick. But then what we're going to do, just as they get comfortable, we're then going to challenge them. Whoops, not, and didn't mean an arrow there to get a box. We're going to try to move their trading into this box. What is that box? This box is what we call robot assisted trading. Robot assisted. Now, I come from a surgical background, right? I spent 25 years of my life with surgeons wearing surgical masks before it was fashionable. And I borrowed that phrase from the company called Intuitive Surgical, ISRG. They have a robot for surgery, but you must be a surgeon to operate on a patient. I've sat in their device. I've used their device, not on a patient because I'm not a surgeon, but I've used it. It's really spectacular. The robots that we build, so Intuitive Surgical refers to it as robot assisted surgery. The billboards in your town say robot surgery. Um, we refer to this as robot assisted. So I try to bend over backwards to, you know, point out you need to have really good trading skill to operate these robots. And what we're going to try to do is develop these skills. But the nice thing is you can go back and forth. The robot might put the trade in. The robot might take it out based on half a dozen different criteria on different time frames, based on what different markets are doing. Do you ever wonder why gold, for instance, can be trading for basically the same price in Chicago and Singapore and London and New York? Don't you know that hedge funds have machines that are monitoring those markets and looking to exploit where there are gaps? That's what they do. Now, we're not doing that necessarily, but as an example of what can be done. So we're going to try to move folks into this box, but you can still intervene. What's really nice about this is that if the machine puts the trade in, if the machine handles the loss, but if you get up, 17,000 and you want to intervene on the machine and put a machine trade and take your profit, then, you could do that. I'm not going to do it, but right now, but you could. The last box is, oh, there's the arrow. I didn't mean to do that. The last box is where we think you'll spend the rest of your life and where we'll be spending ours. And in this box, you got a little glimpse of the earlier little view is robot assisted hedging, where you really become your own hedge fund. Well, you're not soliciting money. We're not. I'm not trading anyone's money. Get some family accounts, um, but I'm not publicly managing anyone's money, and we're not specifically making recommendations to buy or sell a thing. We're gonna do something more valuable. We're going to teach you the process. But this is really, a beautiful thing. And it's like all of a sudden, like over here, you might consider this checkers. You might consider this chess. you might consider this, a double decker chess, and then it becomes like exponential. It's really can become sophisticated. Now, we're not out to try to make it so complicated, and you don't have to either. Um, but it can smooth out and you can get a lot done, but you don't have to. In fact, most of our members are here back and forth. They live between here. We'll ask them, like, when is the last time you actually consciously made a decision to go into a trade? And they'll say, like, I don't know, months. Like, very rarely are they making a decision to go into the trade. Now, they will make decisions to come out a lot of times with the profits, but so, and even in this last one, you can go back and forth. I mean, you can actually go all the way back. But there's one thing you can't do. And I don't want to give anyone the impression tonight that's here that you can't. You can't jump the shark. Sorry. You can't just fund an account, watch a couple of videos, um, and just start, here. You have to have good skill here. We've got to work with you here. We've got to work with you here, and then expose you to this. This process here takes us about 3 weeks, and we need to spend about 1 to 2 hours with you each day if you're going to be an annual member and get these tools on your desktop. If you're not, that's fine. You can join as a monthly and stay in this relatively in this box because they're daily signals, right? They're daily. If you're trying to trade intraday, you don't need alerts from us. You need to be building your own alerts. You need the tools immediately at your fingertips, not coming through me or through some service. That's just not going to work. You need them immediately because something could change here, in a New York minute or less than a New York minute. So hopefully that gives you some idea, but there's no jumping the shark. You have to hone it and it just takes time and you're going to be working on it the rest of your life. And you're going to have weeks that are superb and you're going to have, maybe weeks that aren't, but it'll be up to you. It is learn to trade your game, not mine, not Susan's, not anyone else's, your own. And our members, they want you to do well and everything, but they're only concerned with their own game, and they should be, right? So, any case, I hope that helps maybe clarify some things. So, no, do we only trade algos? No, no, no. We got very good discretionary skills, and we can blend the both. So, no. Okay, I need to get to work to make the nightly video. You're very welcome, Germ. Yeah, no problem. Yeah. Are you in Germany by any chance, or is that just a nickname? Because we have a member in Germany. He's been with us a long time. He's really, really good. He's a software engineer. I'm going to maintain his privacy, but he's really, really good. So when I see Germ, I know if that's Germany. And we most certainly have had members come in and blow us away. We absolutely have. Oh, you're in Florida. Okay, I'm in Tampa. Whereabouts in Florida? Okay. Well, we're neighbors, maybe. we invite everyone to, to visit the website, take your time, watch the videos, give it some thought. I'm not suggesting that everyone do this. I'm not. Um, Not suggesting anything of the kind. You've got to really, this has got to be something you really, really want to do, right? I put on a lot of hours, but I love doing it, right? So I'm like, I can't wait to get going. I used to live in West Tampa. Oh, okay. West Chase, maybe out in West Chase. There you go. And I tell you what, I'll slide this back for folks that are watching, and I can always put this back to a 60-minute. This is not going to change that much for me, so I don't need to do that. So I'll put it back to a 5. And what I don't want to do is give anybody the impression that this is some sort of you know um, something that you don't have to work at. Red light, green light, just throw money at it, and you just automatically. It isn't that, right? It's a very sophisticated tool. Um, we get all kinds of additional views and things that we can do and look at, and um, so I don't want to give anyone that impression, right? It's like playing golf, right? It can, you can watch somebody hit a golf ball and say, "Oh, that's not too bad." Um, there's a skill set, like everything, right? Now, Europe's going to come online at about 2 o'clock, 3 o'clock in the morning, and they're not going to be happy. Mm-mm, nope. So this could punch down even further. So I think it's going to be a dark morning by the time the American public wake up and they're getting ready to go to work. These markets could be gapping down, and then the media, and you know which media they're going to be attaching blame to this. But we're very good. You might want to go back and see the little conversation, or maybe you were here for it about profit factor. If you've been trading for 5 years, I hope you've been tracking your profit factor, Jim. I hope so. Um, and if you're not familiar with that, if you go back on the video in a few minutes, we gave a nice little discussion about that. Um, but do you think so? Is there any news? Yeah. See, we don't. I'm sure there's news. They will attach a narrative. My guess is that, that Europe's going to come online. They're going to add to this, and I think we're gonna gap down. That's what it's looking like now. And then the dominant media is going to attach news, a narrative to it, and I don't think it's got anything to do with anything. We had dry tender here. Last week's news was it was supposedly a Chinese company, right? Remember last week's gap down. I think, today's narrative will be, the tariffs, but it could be anything. We did have some of the things that aren't being reported. We had the top Treasury official quit on Saturday, not wanting to run an audit. Um, yeah, the AI yeah, yeah, the AI deep seek thing. That was bullshit. And this is where we were, Germ. We were, this was the move here last Sunday. We were up in here, and then this happened Sunday night, and that was the Chinese AI deep sink. And then we counter back up all weeks, sucked in everybody, and they it was a lot that got out, and then we do this tonight. Now, why are we doing that tonight? Oh, they're gonna make some shit up, and it'll be anti-Trump, and it'll be the tariffs, but there's a lot of other things going on that aren't being reported, and but the bottom line is these markets are near term, we're very very extended, and we think we're so when we were rallying back up, we got options on it at just about all these peaks, and we're out some distance, and we were putting on more on Thursday and Friday, so we're looking pretty good here going into the start of the week. We'll see how we go. We don't we're not we trade very proportionately, very very disciplined. We have multiple accounts, and this view is primarily on the NQ, but we trade other markets as well. There was weakness two Friday. Yeah, exactly. Yeah, exactly. Yeah, oh, it's almost a carbon copy. Yeah, this past Friday. Yep, exactly. The swing machine picked up on two Fridays ago, not this past Friday, but the Friday before. Swing machine did the same thing. We were short in the afternoon, and then at 3 o'clock, the 1 hour went, and we held it. And this account, I just want you to know, so we didn't. What we ordinarily do, we start with about 30 on this one account, and we have a goal that we want to make. Last week, the high water mark on the account was actually overnight. That Saturday was 54. Was 54. And then the account, when we're not counting profit factor here, so we're just sharing with the money, the account ended up we didn't go long on Monday. We didn't do it. And we booked like about 16, 17,000. So the account was like around 42 or so, thereabouts. And then we did um I it was more of a mechanical trade, not a robotic trade. Um, I was fairly certain that we would retest that last week, and we didn't. We didn't. And I put the trade on, I think, in here, and I thought we would retest it. And I ended up having to cover the trade. And my account was at about oh, we'd gone from like 42 to like 36 or something on the account. So we still going to have a decent week. We would have made about 6 grand or so, which was fine. We're over our goal. But then Friday afternoon, which I didn't expect to be trading Friday afternoon, it did exactly the same thing, and Swing Machine tripped off. And and when it did, this 5 minute, here it is, here it was at 125 on Friday. We took this trade. We actually took it a little bit before, and we took it, and at about 3:30, 4 o'clock, we were up about 6 grand. That brought the account up to about 42. And then we told everybody in a live environment, we're gonna, just like the Friday before, we said, yep, we're gonna stay short because it looks really good, and we're probably gonna revisit. And that's the crazy part, right? I mean, we hunted that dog, we hunted this, in here, and it was, it took like what, couple days there, and we didn't get it, and then they take it right down, and there it is now. So now we got it, and that trade tonight tacked on the extra 10, and in round numbers, and we're back to 52. But I do think what we're looking at, well, I'm going to manage it on the 60 minute, now I don't know. I don't know where the account's going to be tomorrow morning. I mean, and I'm okay with this. I mean, we've hit our weekly goal for last week. We hit our weekly goal for this week. I mean, even if this thing comes back, but looking at this, I think we got a really good shot at coming down into here. And that's the target that we're looking for. And if we can break that, we're going to have a beautiful session with our options too. Now, I originally thought um, that we might not break hard until March, but I'm beginning to think now that well, it's already February 2nd, so January, February, March. It might be that we're going to do it. We're going to get this thing going now. We'll see. For us, for us, I just want everyone to know, um, we're not, giving you that kind of, I bend over backwards on the nightly videos not to give an opinion or a forecast on the market. I just try to present the algos. This is what they're showing us. This is what we're thinking, and there's a number of them, and then everyone's free to do what they want to do. Um, and what is difficult, even for me, even for Susan, is that the algos will sometimes present opportunities, and it's like you just like you can't believe your lying eyes. Like, can you are they seriously going to take it long from whatever? Are they seriously, so that's always, we're human. And the way we handle that is that we trade very proportionately, very disciplined, very mechanically, very robotically. Everything is measured, and we don't have any, we have zero tolerance for negative outliers. And we can say that because we use machines. That doesn't mean we're not going to lose. We are. Doesn't mean, we're not going to have a losing trade. We could have a patch, we could have a soft patch. That can happen. But you're not going to see me down, 17,000. That isn't happening. That's not happening. On a singular trade. That's not happening. But we do set ourselves up for positive outliers. And we had one last week. We actually had a couple of them a little bit. The average winning trade, I can tell you this. And by the way, Swing Machine doesn't use moving averages, doesn't use stochastics, doesn't use MACDs, doesn't, this is all original code. Susan, I taught surgeons how to do surgery. Susan worked for IBM and Lotus back in the day. Very, very smart girl. We wrote these programs, this one and others in the early 2000s. We've been using it for 20 something years. So, um, we can tell you, I can, I'm not going to do it now, but um, this 5 minute NQ for the last 5 weeks, let's just put it the last 5 weeks, the average winning trade is 2 grand. The average winning trade is 2 grand. The average losing trade is 480. This thing's up 16. That is a huge positive outlier. Not normal. Not normal. And we'll set some parameters here to make sure that I get this tuna in the boat, if they should, try to rally this thing. If Europe does that, I don't think they will, but you know what, we're playing also against the Swiss national team as well. The American Treasury has a war room down in, well, the war room, the markets room is down in the basement of the Treasury Department, and they will be open, they open at 4 a.m. And we get a new Secretary of the Treasury, and he is a trader. So could they come in and try to host this down in the morning? Yeah, they could. They could. But we'll see it in our programs, we'll see it, and will I get it all? Probably not. We never do, but I just get my portion. But also the win rate, the win rate on this program is 30 for the last 5 weeks is 33%, folks. 33. So that means you got to be prepared to lose because it's going after the trend 7 out of 10 times, thereabouts. And for the new trader, that can be mentally really, really hard if you haven't had someone walk you through why we're trading the way we're trading and what we're trying to do. Now, if you're a person that likes to have, a pat on the back and you got to win a lot, um, you probably don't want to be a trend trader. You probably want to be a counter trend trader. And that's fine. And we can use the same tool to counter trend. I'm not going to show you how, but here, but it takes us actually a couple days, the first couple days of Q school, just to explain this one tool. And in any case, so I hope that makes sense. But yes, this is a carbon copy. And what happens is, we said this back here, when a market does something like, we see what happened here, what was important that when this occurred right here, let me get an arrow pencil. when this came down the way that it did, you see, it took this out, but it also took out this swing and it paused right in here, but it took this one out. That's why I said when we came back up, I let it come up. I didn't go long. And and then when it came back up here and I got this C right here, I'm like, I'm gonna take that. And I did take it. And the bitch went against me. I did. And I was feeling and I felt we had good wood in the trade. And when I did that, the account was like up, I don't know, 41, 42 grand or so. I had quite a bit of money. I was like, I got plenty of, firepower to hold on, but it didn't. And I saw the C points. I didn't cover it here. I'm like, I don't think they're taking it back up there, Susie. And they took it right back up. And when they did, I covered. And that brought my account down to, again, 36 or so. And that was fine. But then, and I thought we were done on Friday. I'm like, yeah, we're not going to trade on Friday. But I was here watching. I'm thinking, and I was thinking the same thing Jeremy was. Remember last Friday? I wonder if these guys, sometimes they get their computers on a time cycle. I don't know if this happened on a Friday. We should have to go back and look. But I wonder if the guys that sold here, I wonder if they'll do it again. And so we started back down, and that's when I took it. And then we got down into here, and I'm like, you know what? We're just going to stay short because we might open up on Sunday just as we did here and be right down there. So I hunted this bugger. I don't want to swear, but I hunted that bitch, waited on. I wanted that another retest of that, and we didn't get it. We got it now. Sometimes, I mean, it's like deer, I'm not a deer hunter, but, sometimes, if you're a deer hunter or something, you're like, okay, or you're hunting elk. I mean, um, you got to have a little of that in you. Yeah, they do have it on a time cycle. It's pretty cool. I couldn't believe that they took it down. Yeah, yeah, you could begin to see the time. They do. They have time cycles, but it may not be exactly. Um, but so where do we go here? We're breaking it now. Um, I think in the morning, I think we'll be down in here. But if we break through that in the morning, I will cover. I'll cover because we'll probably do the. I don't think we're going to go back up here to the high, but we'll probably cover back up. The American public, they come in here and they panic in here or get short in here. They're going to get their heads ripped off either later in the day or on Tuesday, and we'll just trade back on them. But we're not. I show you that, but I'm not. We can tighten this up. This is kind of a synthetic daily view, but I'm not in here trading this per se. I look at it, gives me perspective, but we try to stay with the algos, and namely swing machine. And I can see everything I need to see right here. I know where I am, and I know what all this means, and so I got a pretty good view. And if you had done this, if you took the ES 120 now, and again, if this is too much money and too big, and you had used the micro, if you had taken a micro contract on Friday at 125, it would have cost you 1,200 bucks. No, excuse me, 2,400 bucks, and you'd be up 1,600. Still not bad, 2,400 to 1,600. Um, this percent return is a little misleading. We use it for stocks, but because you can do this with stocks, it's 3.8% from the signal price to where we're trading right now. But because it's leveraged, it's much, much more money than just 3%. And then, you can see all this. And then of course the Bitcoin, the machine nailed the 10% correction in Bitcoin. It does really, really well on Bitcoin and Ethereum. I just don't care to trade those things, either futures or with um, or the coins. But if you like to do that, you know, this would be a beautiful tool. Here's the Dow. but as far as the news goes, Jeremy, you've been doing this for 5 years, so whenever we go down, everybody's got a reason. Whenever we go up, nobody cares. It's like whatever. We're going up, everything's great. But when we go down and we panic, everyone's got to have an opinion, and it's most of the people you don't want to listen to. That's why I don't have a TV in my office. I don't subscribe to the Wall Street Journal. I have a few podcast people that I like to listen to occasionally, but otherwise I read, listen to music, get on the treadmill, just play some golf, do some fishing, play with our dogs, have a great life, and don't really think about it too much. It could give you a headache, so I won't add to it. But I do think they're engineering it, right? I do think they're rigging it. I do think they're engineering. I do think they're playing with fire. Um, we're fine. I mean, this is very proportional, right? I'm not being disproportionate. I'm not using margin recklessly. They are. When I say they, I'm talking the banks, the hedge funds, the states. I mean, they're playing with people's futures, their retirement monies. They're playing a really dangerous game. And maybe you haven't seen it. I have back in 2013, sitting here, um, a flash crash. The market was falling so fast you couldn't even read the numbers. It was just all green. It was all red, but the numbers were. It just was like it would take your breath away. Well, um, controlled. They have controlled it. It's almost like it's AI controlled, for the last 10 to 14 years. It makes you wonder. They have been remarkable at doing it. Um, I'm okay with them doing it. I mean, at this point, I mean, I don't really want to see the whole thing melt down. I don't want to see them lose, total control. I don't, I don't. But they might. They might. It's a little bit spooky that way. Um, so I try not to even think about it. But that we have seen flash crashes. There was also one night I was here, forget the year, but if you look it up, and it was like about 2 or 3 o'clock in the morning at that time, and the currencies were moving all over the place. So I was trading currencies with the futures, and so I had the yen up. I had all of them, and suddenly the market just like swing machine just lit up. I was just by myself. Susie's sleeping, and there was nobody else up. And I don't even know if, yeah, I guess Twitter was around, um, but it was I didn't have time, so I just reacted, and it was just wild. Like holy smokes, and it moved so fast that I did know that something happened because when I don't want to talk out of both sides of my mouth. Um I don't pay attention to the news. I don't trade on the news. And generally the news has the movement of the market wrong. Could be something else. But there are instances where the market might make a dramatic move really fast, really breathtaking. We're to the point where, and I was looking at like, I'm thinking like, holy shit, is there a nuke or something? It was that dramatic. And then, so I made my trades. It was great. And then now I go to Twitter to see like I think it was Twitter. Um, and I'm like, what is going on? But in particular, it was the yen. What it turned out to be, it was the Japan earthquake. It was the tsunami in Japan. Remember that thing? And what was crazy about it was um, the yen. What would you think the yen would be doing? Would it be rallying or would it be selling off? Any idea? Give everybody, we're on a bit of a delay, so I'll give you a chance. Anybody? if you knew there was going to be an earthquake in Japan, the bad one, what would you have thought would have happened to the yen? Would the yen have rallied or would the yen have sold off? The yen. No idea. Well, um, it's either 50-50. And I thought it would rally. I thought it was going to sell off, actually. I thought the yen would have sold off, but it didn't. It rallied like a son of a bitch. And and it rallied really hard. And I found out later, I'm like, why would that happen? Why would it do that? And the reason why it did that was the traders, this is amazing how markets work. They knew and they understood that there was going to be a lot of damage. And when that became clear, then the whole tsunami, and they knew that the Japanese insurance companies were going to have to do what? They were going to have to pay out claims. So they were going to have to sell stock and they were going to have to buy yen to pay out claims. So the traders swooped in and bought the yen before the insurance companies knew what the hell hit them, which is crazy, right? But that's how markets can react. Um, or maybe there's a natural movement. I don't think there's any natural movement. Made by nature. Nah, I don't think that. And then fibs work. Everything works sometimes, right? So we will draw out fibs and stuff, but um, I do think that Fibonacci numbers are in nature, of course, and they are in the markets and everything, but but they're difficult to measure the performance thereof. See, we have models, and the back tests don't guarantee the future, but we use the models to gauge how we're doing. And so the Fibonacci's are that's a difficult thing to do. Um, what was the other thing I'll just share with you? Oh, this is also the way I think about it, is you can't, so I don't want anyone thinking you can't triangulate the market, right? You can't, you need three fixed points to remain all the time to triangulate, and you can't triangulate the market. And so this is the way I think about it is in days or in, you know, centuries ago, they would, when they were sailing on the ships, they would use a sextant and they would plot on the sextant where they were, they would plot the horizon, and then they would lock into, like the North Star or a constellation. Three fixed points, and then triangulate to get themselves from A to B. Um, the market isn't the stars. It isn't fixed. There's no fixed point. So, and there's no real horizon. You can't, to my knowledge, maybe the AI folks can do it, but it's really difficult to triangulate. So I don't think you can triangulate. And the market doesn't, if it would be like playing golf, and I play on pretty much the same golf course. Um, the market finds the balance, but sometimes the balance moves toward the market. Yeah, I'm not one for market profile or for volume either, so I'm not sure about market balance, but but I don't put any value on volume unless you can show me, unless a person can show me otherwise, or I can measure it. But I don't subscribe to it because there's too many other alternative markets and there's too many places to affect price where volume isn't seen. So I don't put any value on volume. Um, but it would be like if you were playing golf, what is the likelihood that you're going to land, the golf ball is going to land in exactly the same place at exactly the same hole with exactly the same conditions? I mean, it just isn't going to happen, you know, it just isn't going to happen. So, I mean, it might be in the same area, the conditions might be similar, but it won't be exactly the same. Never is. So that doesn't mean that you can't play really great golf. I mean, if you know how far you hit your 7 iron and 8 iron, you can then, gauge where you are, what type of, course you're on, or if you're playing in Tampa versus playing in Colorado, maybe you got to make an adjustment. So, so if the market is not the stars, what is it? To me, the market is more like the surface of the ocean. It can be dead ass calm, just, just flat, going nowheres, which can be very, very trying, and which it does a lot. Like 70% of the time, the bitch is just flat and just kind of going sideways. And then it can be um, raging, back and forth and back. Great, and we're swinging wildly like the Bering Sea. Um, and then other times, it's just they're like opened up the dam or something, and we're just, flowing through, like what they're doing tonight. So it's like the surface of the ocean. So I like to watch occasionally those guys fish for their crab, and it doesn't look so hard. The captain of the boat, he goes out in the Bering Sea. And, how hard can that be? I mean, the guy's worth millions, and he drives the boat around. They throw some crab pots off. They get some pots, they throw them in, and back they go. I mean, it looks pretty easy. Probably isn't. Right? I say it facetiously. Probably isn't that easy. Probably got to learn, you know, how to find the crab, and how to maneuver the boat. And he's also got to be pretty, comfortable with the uncertainty of it all, you know. So I don't, we do these YouTube sessions just, we're not up live every day. We do them just to create some awareness so you can hear my voice, that we're real persons, what we're doing, what we're looking at. But I'm not trying to present what we're doing as some sort of, get rich quick scheme, or that you don't have to learn anything, or that you can just, you're just gonna, fund an account and quit your job and make a ton of money. Um, it's an acquired skill. You need to learn how to drive the boat. You need to learn how to play golf. You need to learn. The other comparison I make is, if you go to the Caribbean, stay in a nice resort, we've all been there. We were in our 20s, and you know, and they were offering, to teach you how to dive in the pool in the morning, and then in the afternoon you go diving. I'm like, Susie, we're not doing that. I think I'm stupid. I'm not going to do that. Hopefully nobody here has done that. Maybe yeah, but I said to Susie, look, you know what? We'll go out and we'll snorkel above them. And if it looks like something you want to do, and when we get back to Tampa, we'll get Patty certified, and we'll go diving. And that's what we did. I don't dive anymore. Um, because quite frankly, Susan loved it, and I spent all my time just watching her. So it wasn't. I finally said, I don't really enjoy this anymore because I just was constantly watching over her. But any case, I think it's a bunch of big waves, little waves affecting each other. Yeah, yeah, sure. Yeah, big waves, little waves. Whatever. I don't even really think about it. It is what it is, and we get different algos to play. The first thing that we'll ask somebody, in the Q school is, what a number of things. I don't need to know or want to know the amount of money, because it doesn't matter whether you have $5,000, you got 50 grand, or you got, 5 million. The process for what we do is the same. Um, so and I think if as a trader, if you're thinking like, oh, I'm just going to make like 50 grand, then I'm going to really, really step on it. No, no, you're not. That wouldn't be a good thing. Nope. Nope. You want to stay with the process. You want to stay disciplined and create the cash flow. But well, some of the questions that we want to know is, how much time you have. Um, you don't have to have it all day. You don't. Mm-mm. Yeah. If it's not going to be an hour a day, it's going to be an hour a day. But how much time do you have, and what you're trying to achieve. Um, and there are some other questions that we would have, and we have a frank conversation. And if we think we can help you, we'll tell you. And if we think we can't, we'll tell you that too. So I have had some people call and say, well, Don, I'd like to get all the algos you got, all 70 of them, but I don't have the 3 weeks to give you. Like, okay, well, sorry, you don't have it. I'm not going to do it. I'm just not. I'm not going to give you the keys to the Lamborghini so that you can drive it off the lot and hit a telephone pole. I'm not going to do that. Now, you still might hit a telephone pole. I hope not. If you go through the Q school, I hope not. I can't, but I'm going to do my level best to make sure that we spend good quality time together. And we're not talking all day for three. We're talking about 1 to 2 hours a day during the 3 week Q school if you want these tools on your desktop. If you don't, and you simply have maybe you have other subscriptions of other things, I don't know, but you just want to see our algos to affect your option trades. Ooh, the vast majority of our members are monthly members and then annual members. And the annual members are limited each and every year. We only issue so many licenses because it's one-on-one. It's not a classroom. It's one-on-one. And it just takes time and we go slow. So that's a little bit about who we are. I better shut up. I got to get tonight's nightly video made for everybody, but it's been fun to watch. We're going to let you watch, and if the image on YouTube ends abruptly, I guess I can erase this. I'll apologize in advance. Um, if you push the notification button on YouTube, if and when we punch up again during the week, which I don't have a set schedule right now, we're just way too busy. I started out at the beginning of the year trying to do that sort of thing. Um, and again, we've been doing this for years, but I just can't commit to a schedule. We're just too busy. Um, Jim, have a good one. Yeah, have a good night. Um, you can push a notification. You get notice when we do punch up. Explore the website, and if you think we can help you, and you still got questions, you're always welcome to call 9 a.m. to 9 p.m. Not going to take a call to now, but at 813-758-8263. And we're on Eastern Standard Time. We're on the Eastern Seaboard, New York time. We'll be nearby. Any questions, let us know. Otherwise, we're going to let you watch. Nice meeting you, Jerm. Beautiful weather right now in Tampa, isn't it? Going to be in the 80s all week. We had, was it last week? It was pretty, last 1 to 2 weeks got kind of chilly. Now it's beautiful. I'll just share with everybody. We got a notice, and I'll respond and to Jim in kind here tomorrow. Um, do we offer trials? We don't. Um, the monthly membership is a monthly membership, so it's month to month, and it's really good value. We have a very, very high retention, but if you join for a month, you're going to learn a lot. You're going to have some really good opportunities, and if it doesn't work for you and you don't like it, you're free to leave. So there's no trial there. It's $100. Um, if you want to become an annual member, um, you first have to go through the Q school. So there's no trial there. And we schedule those things out weeks, months in advance. So we have folks, in them now, rolling into them. Um, and so there's no trial for that. You might think of the Q school as a trial though, because at the end of the Q school, you got a decision to make. We will have spent 3 weeks together. And if you hopefully have TradeStation as you do the Q school, you'll be working. We're going to send you some of the programs. We're going to send you, they're encrypted, but we're going to send you a swing machine. We're going to send you the C points. We're going to send you the programs, and you're going to be trading them. Um, and at the end of the Q school, you get a decision to make whether or not you want to become an annual member or not. If you do, we're going to give you 30% back of your Q school cost. If you don't, and you say, okay, you know what, I got the education, I got everything, I'm going to go. We'll still part friends, and but the vast majority, why we do it is the vast majority of folks go through Q school and do very, very well, and then want to become annual members, and then they're underway, and you'd be underway. You'll be now. We don't maintain the intensity of Q school because I have my own trading. We have new people coming in, and you're going to be doing your own thing. We're available to help around the edges, but you will be learning to trade your own game, and you'll be doing it hopefully for the rest of your life. Um, we have had folks, our retention from one year to the next isn't as high. On the monthly is about 90%. Um, the the annual is about 74%. I'd like to see it higher, but it hovers about 74. We have folks leave for any number of reasons, and sometimes, I think everyone that has always said, Don, they get distracted, or, you know, one of the things that we see, and I tell everybody this, especially going into the Q school, we see early success during Q school, early coming out. And some of the folks that, what happens is they increase their leverage. Not everybody, but a few, they increase their leverage because, if you put 10 on there, that's 170 grand. But you increase your leverage too soon, and you're not comfortable with the car going that fast, with a plane going that fast, or, you can lose your nerve. And I just mentioned this, the diving example, as a matter of fact. True story. What happened was Susie and I, and I'll just leave it with this. We were on a drift dive off of West Palm, and we were fine, but it was a rough dive. There was no visibility. We had to go down about 100 feet. It was a 100-foot drift dive, and then 30 in the afternoon. Oh, bear with me. And there were people that panicked on the dive, and it was kind of a shit show when we got back up on the boat. Not with Susie and me, we were fine, but the dive masters, dive instructors weren't too happy with everybody. Sorry, I'm losing my voice, but long story short, on the way back, I'm losing my voice. It's not like JFK here or RFK. I'm not, thank God, but um, I looked at a condo, and I saw the condo 10 stories, and I said, holy shit, Susan, we were under that much water, 10 stories, and it freaked me out. And I lost my nerve to do it. Um, so I don't, whether it's, diving, or, I don't, or trading, I don't over leverage, or, get over my skis. You can do the same thing skiing too, right? Take some lessons, get really good, or, intermediate, go to the top of the mountain. All of a sudden you think you can ski black diamond, and you get hurt. You don't want to do that. I want everyone to know, we will have machines on this overnight, but we are not going to let this come back very far at all. Um, the average winning trade is 2 grand, so we are how many times is that? Eight times over that, right? Really, really outsized hit here. So we will if this thing comes, sharply back overnight, or the plunge protection team comes in, we'll get stopped out, we'll pocket, and then just get back to our regular trading, right? And we'll trade the volatility, and that's that. We're not trying to um, hit a grand slam every single day. So I just want everyone to know that, right? What'll happen is, I don't have the stop on it yet, but you'll see in QH25, you'll see a little asterisk show up. And I can either put the stop on manually, or I can set a program to trade it on some technicals, and keep us protected.
very busy weekend. We got the 6 hostages out of Venezuela, as you probably know, and they're very safe right now. They're home with their families, and we appreciate the hard work of a lot of people, including Rick Grinnell. We appreciate the cooperation from Venezuela, and we have some very happy people right now. Nobody thought that was going to happen. So they are home, they're safe, and they're with their families. That was a big one. Secretary of State Rubio is in Panama right now, and we're talking about the Panama Canal. What they've done is terrible. They violated the agreement. They're not allowed to violate the agreement. China's running the Panama Canal. That was not given to China. That was given to Panama foolishly. But they violated the agreement, and we're going to take it back, or something very powerful is going to happen. And as far as other things are concerned, as you know, we had a very busy weekend. We're dealing with Israel. We're dealing with Ukraine and Russia. We have meetings and talks scheduled with various parties, including Ukraine and Russia. And I think those discussions are actually going pretty well. The discussions on the Middle East with Israel and various and sundry other countries are progressing. Bibi Netanyahu's coming on Tuesday, and I think we have some very big meetings scheduled.
Mr. President, do you feel that Elon Musk is delivering on his promises to you? Do you feel he's doing a good job right now with
I do. I think Elon's doing a good job. He's a big cost cutter. Sometimes we won't agree with it and will not go where he wants to go, but I think he's doing a great job. He's a smart guy, very smart, and he's very much into cutting the budget of our federal government.
Mr. President.
You saw some retaliatory tariffs from Canada.
Say it?
You saw some retaliatory tariffs from Canada. There was a rider in the order. Are you planning to increase the tariffs against Canada?
Well, it could happen. If they do anything, we will. Canada's been very abusive of the United States for many years. They don't allow our banks. Did you know that? Canada does not allow banks to go in. If you think about it, that's pretty amazing. If we have a U.S. bank, they don't allow them to go in. Canada's been very tough on oil, on energy. They don't allow our farm products in, essentially. They don't allow a lot of things in, and we allow everything to come in. It's been a one-way street. We subsidize Canada by the tune of about $200 billion a year. And for what? What do we get out of it? We don't get anything out of it. I love the people of Canada. I disagree with the leadership of Canada. And something's going to happen there. But if they want to play the game, I don't mind. We can play the game all they want. Mexico.
Maybe, I don't know. I didn't realize that our banks are not allowed in Canada. But maybe that would be a positive development for those that want more trading tools and trading platforms from various sundries. But we'll see. There's a lot going on in the world right now. There's more from Trump here. This is tonight.
We've had very good talks with them, and this is retaliatory. This is retaliatory to a certain extent. Millions of people flowed into our country through Mexico and Canada, and we're not going to allow that. And by the way, we have among the lowest numbers we've ever had of people crossing our border, the lowest numbers since my administration.
Mr. President, you said, so on Truth Social, you said that you were going to cut aid from South Africa. Will you plan to cut aid across other African nations, and why South Africa?
No, it's only South Africa. Terrible things are happening in South Africa. The leadership is doing some terrible things. It's horrible things. So that's under investigation right now. We'll make a determination. And until such time as we find out what South Africa is doing, they're taking away land, they're confiscating land, and actually they're doing things that are perhaps far worse than that.
And on the Fed Chair Jerome Powell, he held rates. What's your reaction to him not changing the rates?
What did you say?
Fed Chair Jerome Powell, the Fed meeting was this week. He held the rates. He didn't cut them.
No, I'm not surprised. I think holding the rates at this point was the right thing to do.
President, which country will be next on tariffs? Would you consider taxing the UK, for example?
Well, we're going to see what happens. It'll happen, but we're going to, we'll see how things work out. It might happen with them, but it will definitely happen with the European Union. I can tell you that, because they've really taken advantage of us. And, you know, we have over a $300 billion deficit. They don't take our cars. They don't take our farm products. They take almost nothing. And we take everything from them. Millions of cars, tremendous amounts of food and farm products. So the UK is way out of line, and we'll see the UK, but European Union is really out of line. UK is out of line, but I'm sure that one, I think that one can be worked out. But the European Union it's an atrocity, what they've done. Well, Prime Minister Starmer has been very nice. We've had a couple of meetings. We've had numerous phone calls. We're getting along very well. And we'll see whether or not we can balance out our budget. With the European Union, it's $350 billion deficit. So obviously something's going to take place there.
For the European Union, what's the timeline? And are you thinking
Where?
along the line 25%? 10%?
With who? With who?
The EU, how much?
I wouldn't say there's a timeline, but it's going to be pretty soon. No, I'm not concerned. We may have short-term a little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that. We're going to change it fast. We're going to make America great again. We have to focus on our country. We have tremendous potential if properly used, and we have to focus on our country. Tremendous deficits with China, tremendous deficits with the European Union, tremendous deficits with Mexico and Canada. And why? What's the purpose of that? Why would we have deficits? And you look at, if you look at pharmaceuticals and drugs, if you look at various products, it's much cheaper in other countries. We're not going to allow that much longer. We're not going to take it. Well, it's been run by a bunch of radical lunatics, and we're getting them out. USAID, run by radical lunatics, and we're getting them out, and then we'll make a decision. I've spoken with people from Canada. I've spoken with people from Mexico, and I've spoken to a lot of other people too. I'm speaking with Prime Minister Trudeau tomorrow morning, and I'm also speaking with Mexico tomorrow morning. And I don't expect anything very dramatic. We put tariffs on. They owe us a lot of money, and I'm sure they're going to pay.
Would you send troops to take the Canal of Panama?
About what?
Panama, the Canal of Panama. Would you send US troops?
I don't think troops will be necessary in Panama. What Panama has done is terrible for national security for this part of the world. And, 70% of the signage on the Panama Canal was written in Chinese. That's not right. So it wasn't meant for China. It should have never been made. The deal was a ridiculous deal. We lost 38,000 people building the Panama Canal, one of the great wonders of the world. 38, think of it, 38. It was the most expensive project ever built by this country, if you take it forward. The most expensive project ever built. We lost 38,000. And what happens? China owns it all of a sudden? It's not going to happen. We're not going to let that happen. We have national security concerns, and they wouldn't let it happen either.
Mr. President, what does Canada and Mexico need to do for you to lift the tariffs? What specifically do you want?
They'd have to balance out their trade, number one. They've got to stop people from pouring into our country, and we've stopped it. They haven't stopped it. We've stopped it. They have to stop people from pouring in, and we have to stop fentanyl, and that includes China. Fentanyl has killed this year at least 200,000 people. It's pouring in from China through Mexico and Canada, and they've got to stop it. And if they don't stop it, the tariffs are going to get worse, a lot worse.
Mr. President,
Going to the border.
Well, that was just about 20, 30 minutes ago, just before midnight. And this dude is not messing around. And he's not the same. This isn't the same person that was there, for his first term. He's not. Um, this guy has has changed a little bit, I think from the assassination attempt. And he is moving. He is moving. And I'm just, I think folks that are here in the States know it, and for anyone the outside. And these people that he's assembled around him, I mean, they are moving and fast. Um, so it is what it is. Not gonna debate foreign policy. It's not our thing. What it will mean, um, in terms of the markets, is volatility. You talk about up and down, down and up. I mean, it's going to be around a while, a good long time actually. So um, we're traders. This is what we do, and this is, you know, we had Sleepy Joe, and maybe a little to no volatility, and just simply a money print. But you can see even tonight, the dollar is reacting to all this. The dollar is actually getting stronger, and other currencies weaker at that expense. But here in the States, that dollar and the higher interest rates is going to, um, could very well, be impacting stocks. That would be, if that's what it is, right? But it's a big world, a complicated world. We're going to have a lot of competing interests, and I think that the globalists, the are going to have um, some opposing forces. The young lady, the premier of Italy, Hungary, Argentina. I'm not sure about that dude in the UK. Trump didn't say anything. I think Trudeau's headed out. I think the next premier we'll see. I don't know Canadian politics, and but you can see the lines are being drawn, and but we'll be aware. That's one of the good things or bad things. I'm not sure, but when you're around the markets, you're you're a little more plugged in and a little more aware of what's going on. But we try not to, we're just trading, and if we're reading our algos correctly, and if we're reading the money flow, and in the news cycles or whatever comport to it, then fine. It is what it is. There are times though when the algos will be doing something, and then we trust them. We trust the money flow, and we don't trust the media. Before Trump in the early 2000s, again, faux, fake media. The financial media is the worst. I mean, they are the worst. They originated fake news. So, any case, but you know what? I think I would love to see. You know, um, I'd love for everyone to have available are the banks, and what are the banking tools and trading tools and all the things that we have here in the States, throughout the world. That'd be a beautiful thing, if that was to come of it. But I don't know. Any case, we're going to let you watch here. And again, if it abruptly ends, I apologize in advance. Um, we'll try to let you watch as much as we can, and we're gonna wrap
up this trade. We're gonna tighten it up. We're gonna bracket it. We're gonna put a profit target down there in case we. Oops, we got a little data interruption there. In case we hit um, another positive outlier, we'll probably put a profit target down there around 30 grand. 30 grand. I think it's possible, and we'll probably put a stop. Probably around protecting like around 14,000 or so thereabouts. We'll take a closer look. We'll put it right on the chart itself. Well, I just want to say thank you for everyone. I want to leave you with something to ponder. And one of the comments that we hear a lot is the anxiety of trading, and the fear, and maybe even the greed, but there's certainly the fear. And I'm not a psychologist, but we've done this quite a bit with folks. When you can get to a place where you can put it aside, um, you'll actually learn to thrive on the uncertainty. And it's almost, meditative. It's is this such an inner calm. But I want to play you. This is not us. This is something that I come across on the Twitter sphere, and I'm like, I like what he's saying here. So let me play it for you. Think about it. And shortly after, we're going to have to say goodnight, but give this some thought.
There's four ways of handling anxiety. First is avoid it. Don't do the thing that stresses you out. That's not going to get you to be an Olympic athlete, and it's not going to get you anywhere with speaking. Second is to learn to manage your levels of anxiety. We can learn through tools such as relaxation, deep breathing, to reduce our level of anxiety. We can also learn through, come on, I can do it, to increase my level of preparedness. So the second way is to manage my level of anxiety and be aware and be able to move it up and down using some tools. The third way of handling anxiety is to tolerate it, to allow it to coexist, to feel that emotion, to feel it in your body, but to not do anything about it, not let it affect your performance. The fourth way to handling anxiety is to start to enjoy it. Now, how do you enjoy anxiety as a speaker? I think it's very important you believe what you're talking about. You believe about the importance of the change you're asking from the audience. When the change is bigger than yourself, it starts to be less about you and more about others. And that's when you start to let go of the anxiety about me. So in order to really start to enjoy speaking, it's very important to see how this change that you're looking for is going to affect the audience.
Now, in this case, he's talking about public speaking, which can be up on people's fear, um, but I think it can be applied to trading as well, and 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 it's also I think a lot of times it's from the uncertainty, the unknown, and when you can get yourself to a place where you embrace it, I mean, you wind up like missing it. Like it's kind of like let's get to work. Let's get it on. Let's go to work. Let's see what we can do. It's a challenge as opposed to trying to avoid it. You can't avoid it, actually. It'll just come in other forms. So our tools are meant to help you um, embrace that uncertainty. We have some approaches, and we work with each person, one on one. And so again, I just want to say good night. Thank you. I'm kind of staggered that we would have had, 473 views for us. That's a lot, right? But it's a big night, big movement in the market. And um, if you find yourself looking for something, like the news or the noise, um, you might want to give that some thought, right? We just track the money, again, the money flow. We'll let others handle the noise of the news. Have fun, everyone, and good luck tomorrow. Have a great week. Can't say when we'll be back up next. Probably Wednesday midday. Have fun.